Hi guys, welcome to BCCA. This is Ravi Teja, and I'm a faculty for Corporate Financial Reporting at CMA Final levels. We have already released a marathon in two parts, which is nothing but CFR ka end game marathon. And many students are continuously messaging that said the content is very useful. And thank you so much for all those responses. And now it's time because most of the students are continuously asking about, sir, when the recordings for theory chapters, when the marathon for theory chapters will come. So through this, I will be addressing that theory ka part. First of all, I wanted to give you a clear-cut clarity on the weightage portion which is there. Two theoretical chapters are there: recent developments in financial reporting and government accounting. In these recent developments in financial reporting, it is completely a dry topic, but I have explained very nicely some important keywords I have made. If you just have two to three readings, and if you remember those keywords, obviously you will be writing those. So you have to just replicate 85 to 90% of content. If yes, then it will be sorted. And another 7 marks though. One practical aspect they are focusing, but this is also from this chapter only. So I have decided to cover it here only. So the aspects which they will be focusing are value added statement, economic value added, and market value added. These concepts also I have explained here only. Government accounting by two 5 marks questions, and put together this only will be totaling to 24 marks. And sometimes in exam though they will be asking minimum 3 MCQs to 4 MCQs also, which means overall the weightage is not bad, guys. It is very good. 30 to 32 marks you will be getting only from this video only. This video ka length though it will be within 3 hours only. Within 3 hours. Every theory aspect I have covered. Government accounting also very nicely I have covered. But what you have to do is just watch this marathon continuously for 3 to 4 times. Then make a proper short notes and try to replicate 85 to 90% of the content. Then from this 30 to 32 marks, you will be aramse getting 25 to 28 marks. Then no one will stop you from getting an exemption. Okay? Yes, let's start the video. So, hi guys. We are totally left with the theoretical topics. So in that, first let us quickly start with the super important topic, which is nothing but government accounting in India. I will be explaining you the important content in this chapter. So wherever I feel relevant, I will stop and I will properly explain that. So later what you have to do is you just have to have some 2 to 3 readings of the content, because it is not that if I have discussed completely, you may not be remember entirely. So if you want to replicate at least 70 to 80% of what we have discussed, it needs at least 2 to 3 times of basics or revision. Okay, so this is what I'm expecting. You can aram say watch the theoretical part, and then you have to do 2 to 3 times self revision on your own. Then only you can replicate at least 70 to 80% of the content which I have been using here. Okay, the content is directly taken from the study material only, with here and with minor changes here and there. Okay, so this is from the last material only. So whatever the last material concept book which most of the students are having, this I am explaining from that book only. So having said that, let us quickly start with the definition of government accounting and things like that. Okay. Okay. So fine. So starting, we will start with the definition of accounting. So this definition of accounting, from our starting intermediate days itself, we have been knowing this definition. It is nothing but the process of recording, classifying, and summarizing the financial transactions, and whatever the results of the financial transactions, and whatever the financial position of the entity which is there for which you are doing the accounting. You just have to communicate the results and financial position to stakeholders. This is very normal the definition of accounting. They will not ask this kind of a question, but it is very essential for you to understand the basic definition of accounting. It is not changing. So whatever the definition which you have been learning from the starting itself, it is exactly copy paste. Okay. Fine. So second part, government accounting. Government accounting is also similar to whatever the accounting which you have heard earlier, but this time it is completely focusing from the government perspective. So whatever the funds, whatever the public funds which it have been collecting and utilizing, it mainly focuses on recording, summarizing, and classifying. So anyways, it will be done with respect to whatever the financial information which the entities are using with respect to collection of the funds. For example, if you observe the taxes, So collection of the taxes, whatever the financial information which is essential, that should be reported. Along with that, once those funds are collected, it is very much essential to properly utilize those funds. And whatever the financial information with respect to the utilization of the public funds also should be communicated to the stakeholders, which is nothing but the government only. Okay, so it will, with respect to this information, whatever the information which it obtained, it will be very much essential for the purpose of preparing fiscal budgets and things like that. So whatever the allocation, whether it is made efficiently or not and all, later on government will be understanding only with respect to the government accounting. Because of the results of this only, it will be in a position to understand its present financial status. Okay, it is also called as public fund ka accounting also. Government accounting is also called public fund accounting. Fine, so understood. Next, this is a little bit important, so you just have to remember few main points. So whatever the features of government accounting which is there, they may ask a 7 mark question. Chances are less, but they may ask. So you just have to properly read this question 3 to 4 times. If you understand aram se, some things are very much common things, you guys have already know some of the things, but some specifically which are applicable to government accounting, those points are there. You have to specifically quote those points in order to get maximum amount of marks. The first thing though, specific system of accounting is applicable. So whatever the many principles of traditional accounting which we have been following, many of those principles will apply even in government accounting also. In addition to that, government regulations also plays a key role with respect to report any kind of a government transaction. So whatever the government regulations which they have been releasing from time to time, government accounting should definitely, what should I say, should definitely follow those kind of a regulations. Next thing though, reporting of utilization of the public funds. See, we all know that government main objective is not only profit generation. So of course profit or loss finding is important, but it is not the sole objective of the government entity. The main crucial crux of the government accounting is to report how public funds have been utilized. Public funds or public properties have been utilized. Its main focus is completely on the utilization or collection of the public funds rather than finding out the profit or loss, just like normal entities. Okay, fine, sir. So whatever the government regulations are there, now these will be maintained as per the rules and regulations, and this will be amended from time to time. Something, this double entry system though is very much common. So if there is a credit, obviously its corresponding debit also will be done. So major kind of an accounting, complete kind of an accounting will be done based on the double entry system of bookkeeping. No single entry at all. Okay, this is very basic sub point. You already know this point. Next comes the budget head. Budget head is nothing but expenses of government will be classified into different budget heads. And these will be allocated to heads based on the approved amounts in the parliament. If you observe, for example, estimate, let us take an example. The government is planning, the government is having a fiscal budget. For example, 78,000 crore is the total revenue earned by the government. Now it should allocate to different sectors. It should allocate to different sectors. For example, healthcare is there, education is there, defense is there, roads are there, infrastructure is there, communication is there, agriculture is there, all these things. Home minister, ministry of home affairs is there. For all these heads, how much allocation of funds is necessary and all that will be determined in the parliament. So all those expenditures will be classified into different budget heads, and expenditures will be allocated to these heads based on approved amounts. So whatever the amount is approved in parliament, based on that only allocation will be done. Budgetary regulation is nothing but if any healthcare, for example, they want to allocate 5,000 crores, it is very small. But for example, if they have decided that healthcare will be only getting 5,000 crore, it should get that much only. It should get that much only. It should not exceed. And another thing, though, mode of transaction will be through banks only. Cash should be very limited. Cash will be very limited in specifically this government accounting ka thing. Most of the transactions will be funded through banks only. And another thing is fund-based accounting. Fund-based accounting, which means this is called as separate funds. For example, in income tax, if you remember, there is something which is called as health and education cess. Sir, the difference between tax and cess, if you observe, so whatever the government have collected in the name of tax, the government can utilize the tax ka amount for any purpose as it is required. But if you observe that health and education cess, the main purpose why it have collected and it have kept the name as HEC, it will be using such health and education cess ka amount only for health and education purpose. The particular source of income will be used to specify, it will be specified only for that operation, only for that expenses only it will be utilizing. So many kind of a government, it will collect a few funds only to fund certain expenses. Krishi Kalyan cess, like this also in earlier indirect taxes, there is a little cess which is called. So that cess ka amount also will be utilized for the welfare of the farmers, which means fund based kind of an accounting is a key feature of government accounting. Next thing to auditing. Of course, if accounting is done, there is some person who have to audit. Of course, you know that it should be done by an independent third party. So whoever have prepared the accounts, if the same person have did the audit again, then the purpose of it audit itself will be defeated. Correct or not? So the thing is, auditing should be done by an independent third party to misutilize, to prevent any misutilization or misappropriation of funds. If huge public, if huge, what should I say? If huge public, I mean, what should I say? So whoever the people which are representing the people, whoever the persons who are representing the public, since most of the people are involved, there are high chances that misutilization and misappropriation of the funds will be done. So in order to cover these things, auditing is required. To summarize whatever the things which we have covered, first thing, the crux is specific system of accounting, which means government regulations have to be followed. Next, though, reporting and utilization of the public funds is also an essential feature of the government accounting. Double entry system will be followed. Okay, government regulations also have to be followed. Budget heads ka classification. Mode of transactions will be generally through banks, and fund-based accounting and audit has also needs to be performed. Key features of government accounting. Next comes objective of government accounting. Sir, why government accounting is necessary? Very simple. First thing, to record the financial transactions. To record the financial transactions. Next thing, to avoid the excess expenditure beyond the limit of budget approved. Arey Baba, if budget is prescribing certain limit, obviously you should spend within the limit only. You should not spend beyond the limit. The crux is to compare that part only. So whatever the budget and whatever you are actually spending, whatever you are spending, that should be within the limit. Second thing, to provide information, financial data as well as information. Next thing, to record the expenditure and whatever, I mean, in order to prepare the financial statements, obviously the main basis itself is the financial statements ka basis itself is accounting. Okay, without accounting, I cannot prepare financial statements and whatever the reports which are necessary by the government. Okay, that also cannot be done. Next thing, sir, in order to help in auditing, what I will audit, I will be auditing the financial statements only now. Financial statements I will be getting only from the government accounting. Without this accounting, where can I audit? How can I audit? To prevent the misappropriation of the funds and to help in preparation of the annual budget. This is the key. The basis of preparation of annual budget is nothing but accounting itself. Normal sub point, just go through. Okay, little bit. They may ask 7 mark. I mean, they may ask 5 mark question. Very simple, sir. Why government accounting is necessary? What is the objective? Simple, to provide financial information to the users. Next thing, to get the audit done, to get the books of accounts audited. Next thing, to prevent the misappropriation of the funds, to help in preparation of the annual budget, to check whether whatever the expenditure which is incurred that is not going beyond the limit, to record the expense as per the provisions of the act, to help in preparation of the financial statements and reports. Just go through these points 3 to 4 times. Aram, so you will be remembering these points. Fine. Yes, sir. So next thing, guys, general principles of government accounting. This is the important thing. Period of accounts will be done as per normal financial year only from the 1st April to 31st March. One crux or crucial thing which you have to remember is, sir, government organizations or whatever the government, see here, government refers to either central government or union government, state government also, or even union territory governments also, which are having legislatures. Government means everything. Not only that, any governmental organization, any entity which is substantially financed by the government, everything is covered. When I have when I speak the word government, it includes central government, state government, union territory government, and governmental organizations, governmental departments also. Everything will be covered. That I will explain later. Okay, fine. So it will be following cash basis ka accounting, very, 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 very important. If any bookish adjustments are done, specifically if they are authorized by the CAG, Comptroller and Audit General, Comptroller and Auditor General. I think you have already aware of this from your corporate accounts and audit in your CMA Inter. Some bookish adjustments may be authorized by that person, but other than that, everything will be accounted as per the cash basis only. Three kind of an accounts will be maintained: consolidated fund, contingency fund, and public accounts. Discussion is having ahead of these three funds or these three parts. Discussion is there, which will be covering a little bit later. Okay? Yes. General principles of government accounting. We will be following what should I say? Financial year, normals of financial year, cash basis of accounting. We will be following cash basis of accounting. Yes, sir. A little bit important difference between commercial accounting and government accounting. Commercial accounting, as in whatever the traditional accounting which you have been learning these days, all these days. Government accounting means it is specifically applicable to government. Okay, that's it. Meaning to pretty simple. Accounting system applied in a government organization is called a government accounting, and whatever non-government organizations pay accounting which is applied, that is called as a commercial accounts. Sir, objective to record and report the utilization of public funds. Commercial objective, commercial organizations ka main thing is to find out profit or loss. Even for government accounts also, that will be an additional objective, but the primary should be reporting of public funds. Scope though more detailed than commercial accounting, but commercial accounts, so it is very simple than government accounting, because a lot of government regulations will be involved in doing this government accounting. Budget, government budget will be there. Commercial accounts, so it is not based on government budget. Obviously, it will be different from entity to entity. Basis to cash basis. Government accounting cash basis. Sir, commercial accounts, it is having an option. If it wants, it can follow cash or either accrual, or both can also be done. Sir, government accounting, to what standards I have to follow? What are the things which I have to follow? Guys, whatever standards which you have to follow and all, that will be decided by the government only. Some financial rules and provisions will be fixed by the government only. Government accounting standards are there, those are separate. Normal accounting standards though should be followed by commercial persons, non-governmental entities. For example, whatever the indices and whatever the accounting standards which we have been learning, those things should be followed by commercial accounts, by commercial organizations. But if you are a governmental organization, what you have to follow, what rules you have to follow, and all that will be decided by the government. Users of accounts, sir, government accounting ka users is whom? Obviously the government, but commercial account ka users though stakeholders, investors, creditors, bankers, everything will be commercial accounts ka stakeholders, but government is the key user of the government accounting. Sir, auditing, important. Government ka audit will be done by Comptroller and Audit General. It is also called as Auditor General Office. But commercial entities ka audit will be done by professional auditor. Normal company ka auditor, independent person, third person have to do the audit of the company. Okay? But if it is a government, Auditor General Office. Auditor General Office. Obviously, C and AG will do the things. Okay? Right, sir. Discussion is there for that C and AG. In the next only, that is there. Okay? Important. Very, 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 very important. High chances. This is important even from exam perspective, MCQ perspective, and also from theoretical perspective as well. Okay? So let us focus this part. Comptroller and Auditor General of India. This is directly established by the Constitution. Its power is directly established by the Constitution. Sir, what is the purpose of this C and AG? What all the entities which this C and AG, which this Comptroller and Auditor General of India has the power? First thing, to whatever the expenses and receipts of the government, whatever the expenses and receipts of all these persons, ka audit will be done by C and AG only. So to conclude, whatever the audit of all receipts and expenditure of government of India, central government, state government, bodies substantially financed by government, government owned corporations, company in which a government is having equity shareholders more than or equal to 51%, which means if it is a government company, or subsidiary of a government company is also treated as a government company only. To conclude, CNAG will perform the audit of all the receipts and expenses of union government, state government, any body substantially financed by the government, any government company, government owned corporations, and even a subsidiary of a government company also. So all these entities ka receipts and expenses will be audited by CAG, Comptroller and Auditor General of India. Sir, who will appoint the Comptroller and Auditor General of India? It will be appointed by President of India. He will be appointed by President of India, of course, for a period of 6 years. CNAG is an individual only, which means normal is a person like us only. But CNAG will lead a team of auditor staff. Multiple auditors will be there to carry out the auditing functions. Okay? CNAG का main objective is to conduct the audit of government. Government means not only just the government. Governments are there. Central government is there. State government is also there. Union territories, if those are having legislatures, unka audit also will be conducted by CNAG only. Along with that, any body substantially financed by the government, government-owned corporations, or company in which government is having more than or equal to 51% of shareholding, popularly called as a government company, and last month, though, subsidiary of a government company is also treated as a government company. All these entities ka receipts and payments ka audit will be done by C and AG. Okay, fine. Next thing though, concept number 8, little bit important. So I want 100% attention to this. Functions and duties of C and AG. This content though 70 to 80%. It's more than that only. 80 to 90% ka content I have directly taken from the study mat only. No need to worry at all. No need to study other things other than this material. Okay, so what you have to check is, sir, what are the functions and duties of CNDG? Very simple. First thing though, compilation of accounts. So whatever the accounts of the union and states, whatever the accounts of the union and states which are there, different states ka, it should compile. Who have to compile? C and AG have to compile. Whatever the departments which are responsible, whatever the departments which are under the C&AG, he will ask all those departments to compile the accounts. And once that is done, again he will do the compilation of accounts of all the states and the union ka accounts also. He will only compile. Second thing though, keeping the accounts. So whatever the compilations which he have made, obviously it is his responsibility only to keep all the accounts. First thing though, if president feels so, he may relieve the responsibility from compiling the accounts or from keeping accounts also. But the thing is, president can do so only after consulting with CNAG or any governor of state with the approval of the president. After consulting with CNAG, can also relieve that person either to compile the accounts or to keep the accounts. Simple parts. Listen once again. Compilation of accounts and keeping of accounts is the primary responsibility of the CNDG only. That is fine. But if the president feels, that such responsibility of compiling and keeping accounts should be relieved, he can do so, but after consulting with CNDG, sir, or any governor of the state is feeling that its responsibility should be relieved from CNDG, then what he can do is he have to go to the president and get the approval. And after consulting with CNDG, you can even do that part also. Okay, fine. Next thing though, preparation on submit the accounts. CNDG only, whatever the accounts which he have compiled, he have to prepare each account, each year ka accounts under annual receipts and disbursement of union government and state government and union territory. Preparation and submission ka accounts also will be done by CNDG only at consolidated level, either at union government level, state government level, and union territory level. These three levels ka accounting will be done by consolidated level pay. Accounting will be done by C and AG only. Sir, whatever the union government ka accounts which are there na, that will be submitted to President of India. State government ka accounts will be submitted to governor of the state, and the union territories having assembly or legislature, that will be submitted to administrator. To conclude, sir, union government ka accounts will be submitted to President of India. State government ka accounts will be submitted to governor of the state. Oh, union territory, but if it is having assembly, it will be submitted to administrator. Next part two, sir, if the president is feeling C&AG should be relieved from this responsibility also, or governor of the state is feeling, but he have got the approval from the president that this person, this C&AG should be relieved from the preparation and submission of accounts also. This can also be done, guys. Oh, to conclude, we have covered three functions. So, first function to compilation of accounts. Second function to keeping the accounts. Third function to prepare and submit the accounts. Everything is the responsibility of the C&AG only. But if the president or state governor feels C&AG should be relieved from these responsibilities, the thing is, president after consulting with C&AG can directly do that. Nor the state government after consulting the C&AG with the approval of the president also can do that. Sir, submission of the accounts. Central government ka accounts will be submitted to the president. State government ka accounts will be submitted to the governor of the state, and union territory having assembly ka accounts will be submitted to the administrator. Okay, fine. Very key function of this C&AG is to do the audit. C&AG have to do the audit from all expenditure from the consolidated fund of India. So what is the meaning of consolidated fund of India? Discussion is there. Just wait. Consolidated fund of India is nothing but whatever the taxes which the government is getting, whatever the non-tax revenue which the government is getting, whatever the loans and advances which the government is receiving, everything will be credited to one account of India, which is called as Consolidated Fund of India. From that only, government expenditures will be incurred. So the thing is, whatever the expenses which you are incurring from that consolidated fund, it should be legally dispersed, which means after getting any approval, if it needs any approval, it should get the approval. Only then such money should be dispersed. Whether it is done like that or not, to check, it is the responsibility of the C&AG. Next thing, sir, okay, approvals are fine. Now we have to check. Whether whatever the money which is being released, whether they are utilizing from that purpose or not, that also you have to check. If you remember, there is something called as propriety audit. There is something called as propriety audit. You have to check whether for what purpose they have given the loan, whether they are utilizing for that purpose or not, also you have to check. This is specific to the government entities, and C&AG will do this kind of audit, which is called as propriety audit. It consists of other audits also, efficiency audit, effectiveness audit. Those are different things. Those you will be learning in your audit, guys. But here, C&AG have to check whether whatever the expenses which they are incurring from the consolidated fund of India, whether they are getting enough approvals or not. Even after getting enough approvals also, whether they are incurring for the purpose for which they have been taken or not. Okay, fine. Next thing though, so not only government, for all the authorities, for all the entities which are substantially financed from union or state, we have to check even those bodies also. If any body is substantially financed and all the receipts and expenditure which are substantially financed by the government or loans, if it is more than 1 CR, then you have to do the audit also. Audit of accounts of stores and stock. Whatever the stores and stock which are lying with the government, everything should be audited by the C&AG. So audit of receipts and expenses also should be done by that only. Next thing though, if government have given loans to any other authority, assume central government have given loan to any authority, or state government have given loan to any authority. For example, central government itself can give a loan to state government. In that case, if C&AG wants, he can have the right to access all the books of accounts, all the books of accounts. If C and AG feels, if C and AG feels it, he is having a relief from security also. But the thing is, if the president or state government or union territory feels, hey, C and AG, you please go, then they can relieve also. Then they can relieve such C and AG also from the security. Last thing though, limitations on access. If it necessary, if it feels, C and AG also cannot access the accounts of few corporations. This will be decided by higher level of authorities. If they want, they can specifically restrict the C and AG also to access any kind of an to access the accounts of such corporations which are highly confidential. That thing also can happen. That thing also can happen. The next part. Check this. Power of C&AG in relation to audit of accounts. Sir, what all the powers which the C&AG can have in respect to audit of accounts? C&AG only can appoint the places for inspection. Whoever the person in charge is there, C&AG can inspect that person. He can ask the questions. He can inquire such persons, and whatever the observations which are there, he can even do that also. C&AG has the right to request the information which are necessary for preparing any accounts or reports. It can ask such person. He can ask such person whatever the information which he feels which is necessary and all. The thing is, whoever the officials are there, they have to definitely respond to the C&AG. And the requested information should be complete form as far as possible. Okay, fine. Last thing though, audit of government companies and corporation. Sir, not only government means union government or central government or government corporations. The thing is, even government companies and corporations also should be audited by C and AG only. Yes, sir. So check this. Audit of government companies के लिए Companies Act you have to follow. They will say na appointment of government company ka auditor, C and AG will appoint that person. The governor of the state or administrator of union territory can request the C and AG to audit the accounts of a corporation in public interest. See, companies, government companies, so Companies Act is there. But what about government corporations? Either governor of the state or union territory having assembly, then administrator will come into the picture and they can ask the C and AG to do the audit of government corporations. Then C and AG is having the right to access the corporation books and accounts. A request must be made after consulting the C&AG and allowing the corporation a change to respond to the audit proposal. Normal setting. Sir, what is the last part? Report is done. Audit is completed. C&AG have finally prepared the audit report. Now the thing is, sir, if it is central government ka audit, auditor should submit that to central government. If it is state, whatever the corporation which is there responsible for that government, it should submit to that. Central government, after receiving the report, it should present the report in the both houses of the parliament. State government, though, it should present in its assembly or legislature after receiving the state government ka audit report. Okay, fine, understood. We have understood this part. Laying of reporting ka thing also understood. Report submission. Audit C&AG should submit the audit report of government companies and corporations also. Central government have to place that in the both houses of parliament if it is related to central government. State government means that it have to place it in the legislature as soon as possible. Okay, fine sir. Okay, fine sir. Now the next part, a review of accounts. We already know that government companies ka audit will be done by CAG. Okay, fine. Now the thing is, sir, what are the ultimate responsibilities of this C&AG with respect to the government companies ka audit? It is very, very simple. This thing though, I am damn sure that you will be covering this in your CMA inter-level corporate accounts and audit ka paper. Okay, there in company audit ka chapter, for government companies ka statutory auditor will be appointed by C&AG only. If they feels, if C&AG feels that it is necessary to get another audit, which is supplementary audit, or even if it wants a specific areas, if it wants to get again an audit, it can also do that also. If it wants, it can get the entire audit itself done by another person. That audit also can be done. Or if with respect to certain area, if it feels that audit is required, then it can even do that also. ठीक है. Supplementary or test audit can also be ordered by this C&AG का person. Next thing तो sir, whatever the statutory auditor have reported, whatever the statutory audit का report which they have been given, in that to that report basically C&AG have to add few comments. ठीक है, fine. Next thing though, the C&AG provides directions on how to audit the accounts of government companies. Directions, suggestions will be given by C&AG only to the certified, or mean to the statutory auditor. Supplementary audit means what, sir? Accounts certified by the statutory auditors are subjected to additional audits who can also supplement or comment upon the audit reports. Supplementary audit, important point. Okay. Even after statutory audit is completed, if the C&AG still wants to audit few areas, in that case, he can even do that part also. Understood? Yes. Next part though, Public Accounts Committee. Sir, what is the purpose of this Public Accounts Committee? It is very simple, guys. Whatever the expenses which you have been, whatever the appropriated funds which are there, whether those funds are wisely spent for the intended purpose or not. That part also. And second part is whether they are within the limits or not. That also will be taken care by the Public Accounts Committee. Its responsibility is whether they are incurred for the specified purpose or not. That is the first part. Second part though, whether those limits are within the parliamentary limits or not, that also you have to check. Although C&AG audit government accounts, committee reviews this Public Accounts Committee is there. Sir, already C&AG is there. Still, what is this PSC role? It will reviews the CAG reports on revenue and expenditure, ensuring the parliamentary control over expenditure. Sir, this PAC consists of members of parliament, selected members. It will consist of up to 22 members, out of which 15 are from Lok Sabha and 7 members are from Rajya Sabha. On rotational basis, this will be done. Speaker of Lok Sabha only will appoint the PAC का chairman. ठीक है? Fine. That person cannot be a minister. If he becomes a minister, then whatever the position which he have there in this Public Accounts Committee ka member, he have to withdraw from here. Okay, understood. So it will ensure the parliamentary control over the expenditure, whether the funds are spent wisely for intended purpose, while the government adhere to parliamentary limits and all will be taken care by this Public Accounts Committee. Next part, sir. Role of Public Accounts Committee, important. Public Accounts Committee is also important. Role is also a little bit important. So check this. Main thing though, once the CAG submits the audit report, it will examine completely where the loopholes are there. Are there any instances of overutilization of the public funds, or whether any funds or loans are dispersed without the necessary approvals and all? That thing also will be taken care by this Public Accounts Committee. Second part though, it may even order investigation also. C&AG will give the recommendation to this PAC that if it necessary, that few areas or few government undertakings may, if there is any sort of investigation which should be done, it will be flagged by the C&AG and it will obviously give the recommendation to the Public Accounts Committee. Ultimate decision is this Public Accounts Committee only, but generally if C&AG feels it is recommendatory, then obviously P&AC also will provide the green flag to this investigation. Okay, fine. So next thing, sir, unauthorized expenditure. If any unauthorized expenditure is found by the PAC, is found by the CAG report, then PAC will examine whether proper authorization, whether it is done within the limits or not. If there are any such instances, obviously those will be highlighted by the PAC from the C&AG report. Next, ministry spending oversight. PAC will check whether there is financial integrity which is there or not. Financial integrity have to be checked. If there is any lack of financial integrity, then PAC have to be strictly taken care of that. Last one, though, public corporation ka scrutiny. Even public entities ka scrutiny also. Public corporations ka reports also will be reviewed by the PAC. And if any administrative weaknesses, if there are any loopholes which should be mainly focused, it can also be done by this Public Accounts Committee. Okay. So this PAC committee is also a little bit important. So you have to check this part also. Next, the super important part is this consolidated fund of India and this contingency fund of India. Very, 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 very important. They will definitely ask questions. They have asked already questions from this consolidated fund of India and contingency fund of India. Okay, important. So let us take this. First one, sir. Consolidated fund of India means very simple. Whatever the revenues which are received by the government, either income tax or excise, customs, any taxes, and even non-tax revenues also will be credited to a account which is called as consolidated fund of India. It is having even a constitutional validity also. Whatever the loans which are raised by the government by issue of notifications, treasury bills, and any loan even obtained from other country governments, or if it is a state government, whether it is obtained from central government or anything, any international institutions pay, if you have raised any external debt, everything will be credited to consolidated fund of India. All expenditure will be incurred from this fund only, and even a single rupee also cannot be utilized without the authorization of the parliament. That's it. Completed. Consolidated fund of India done. All revenues, either tax revenue or non-tax revenue, will be credited to consolidated fund of India. Not only this, any funds, any finances which are raised by the government from foreign governments, from foreign countries, any external debts, even treasury bills also, everything will be credited to this fund only. Even a single rupee spent from this consolidated fund in India needs a proper approvals. Proper approval channels will be very much necessary. Okay, that's it. You just have to write these 3 points. More than sufficient to get 5 marks. Just one time go to the study material content. Okay, if you remember this part, if you are able to replicate this 90 to 95%, then it is sorted. You will aram se get full out of full marks. Okay. Next thing, sir, contingency fund of India. Sir, what is this contingency fund of India is there? Guys, if you observe the name itself, it is like, just a minute. If you observe the name itself, contingency means, sir, any government emergencies or any kind of, what should I say, urgency required funds are there. Then the thing is, see, if you observe any contingency fund, this is also constitutional validity is there. Advances made from the fund are made for the purposes of meeting unforeseen expenditure which are resumed to the fund to the full extent as soon as Parliament authorizes additional expenditure. Very simple, sir. For example, floods, okay, or defense pay. Some enemy country have suddenly attacked our country. Let us assume all the funds of India got exhausted. Then it can incur the funds from this contingency fund of India. And once such expenditure is met, again, it is the responsibility of the government to deposit whatever the amount which you have utilized for that purpose in that fund once again. This is like an impressed account. Impressed account is nothing but a kind of storage kind of an account. Whenever you feel you can utilize, but if you have utilized, you again have to deposit that back. Okay. Yes. It is held on behalf of President by the Secretary to the Government of India, Ministry of Finance and Department of Economic Affairs. They may ask MCQ. It will be held on behalf of the President by the Secretary to the Government of India. Okay, fine, sir. Understood. Important. Very, very important. So from this Public Accounts Committee, not only this, from this C&AG, I can say everything is very, 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 very important. From the functions and duties of C&AG. Next part, though, audit of government companies and corporation also super important. Review of accounts also is important. Public accounts committee is also important. Consolidated fund, very important. Contingency fund, very important. Now, let us quickly move to the next part, which is called as Government Accounting Standards Advisory Board. Sir, what is this? Shortly called as GASAB, Government Accounting Standards Advisory Board. It is very simple, guys. The purpose of this is to issue government accounting standards. In order to maximize the benefit from the government accounting, it should be definitely follow, it have to follow the government accounting standards. Sir, who will issue these government accounting standards? Those are issued by Government Accounting Standards Advisory Board. Objective is very simple, to enhance the government accounting standards and financial reporting. Sir, already we have few accounting standards, but the thing is, those should be more aligned to the government policies of the country. That is the key. That is the crux. Its responsibility is to improve the accountability and to align with international trends. Everything, India is moving globally. Not only normal entities, even government also have to cope up with the international trends. Sir, another important question. Write a short note on CASAP. They can ask. Very important, they can ask this question. Sir, first one though, develop and enhance government accounting and financial reporting to strengthen the accountability. Sir, any new accounting standard also it can improve, or whatever the existing accounting standard which is there, it can even improve that also. Developing a completely new set of a standard or enhancing already existing standard. Second thing though, based on the user needs, it will improve the disclosure requirements. It may improve the relevance and usefulness of the financial reports. The extent of disclosures may be increased. Everything will be done by the GASAB. If there are any changes in the governmental policy, any government environment, if government itself got changed, customized, it will be customized according to the government requirements. So whatever the standards which are there now, that should be kept up to date to reflect the exact changes as per the governmental environment. Okay, fine. So next thing, this GASAB will issue two accounting standards. First one to Indian government accounting standards. Second one to Indian government financial reporting standards. Sir, you have already said that government will be using cash accounting. Yes. For that cash accounting, you have to apply Indian government accounting standards. But in future, they will adopt accrual accounting also. But as of now, government of India is still following the cash basis of accounting only. This you have to remember. Sir, as of now, government of India is following cash basis of accounting. Yes. But in future, they may adopt accrual accounting. Sir, if they follow accrual accounting, what are the standards which they have to follow? Indian government financial reporting standards. But for cash accounting, Indian government accounting standards. Understood. Next part. Notable IGAS. Three IGASs are already notified. Already they are approved also and they are into force also. They are, as of now, they are in force. Sir, what are those three? 1, 2, 3. IGAS. These are for cash basis, guys. Cash accounting. 1, 3, 1, 2, 3, 5, 7, 9, 10. 6 standards are there totally. Sorry. 1, 2, 3, 7, 9, 10. 1, 2, 3 though already notified, already approved, already they are in force also. But 7, 9, 10 though they are notified, but they have to be approved from government of India. They are approved by GASAB, but still government of India have to be approving that part. Guys, every standard is important. Every standard is important. They may ask you to write a short note on IGAS 1, 3, 7, 9, 10. Like this, they may ask a question. But trust me, first of all, you just have to understand what this standard covers. You have to remember at least these names. If you remember these names, then you can write the content. Then aram se you can write the content. Sir, IGAS 1, its objective is to account for guarantees given by the government disclosure requirements. Any guarantee given by the government, what all the disclosures which will be done and all will be covered in IGAS 1. So IGAS 2 to grants in aid ka classification and accounting. Grants in aid ka classification and accounting will be covered in IGAS 2. Sir, what happens to IGAS 3? Loans and advances made by the government. These three already notified, already approved by the government of India, and already they are into force as well. They are in force also. So to repeat, IGAS 1, guarantees given by the government. IGAS 2, grants in aid ka classification, accounting, everything. IGAS 3 to investments and advances. IGAS 3 to loans and advances made by the governments. Okay? 7, 9, 10 are also important. You have to remember at least these names. Sir, IGAS 7 money, foreign currency transactions. Sorry, foreign currency transactions and loss or gain from exchange rate variations. IGAS 9 to government investments in equity. IGAS 10 to public debt and other liabilities of government disclosure requirement. First, you have to remember these names. Then we can move into content because they may ask any IGAS. For example, they may ask like this, write a short note on IGAS 3. Then we have to write about loans and advances by the government. IGAS 2, grants and aid. IGAS 7, foreign currency transactions. First, you have to remember these names. Then we have to go into the content. First standard. Guarantees given by the government, disclosure requirement. So first one though, government, it will give guarantees to many entities. Many government corporations, central government will give the guarantee. Sometimes for state governments also, central government will give the guarantee. Sometimes for union governments with legislature also, central government may give the guarantee. One state government may give the guarantee to another state government. Anything can be possible. So whatever the guarantees which are given by the government, how to do the accounting and all will be covered in IGAS 1. If you look at the first part, just to check whatever the highlighted areas which are there. The objective of the standard is to set out the disclosure norms in respect of the guarantees. Either the guarantee given by the central or the state or union territory, everything. So see, everything have to be reported uniformly. If central government have given the guarantee, it should also be done uniformly. If Karnataka state government have given, it should also be done uniformly. If Andhra Pradesh state government have given any guarantee, it should also be done uniformly, and complete disclosure also have to be given. Second part, statement of guarantee preparation should they have to form. They have to form statement of guarantees which should contain opening balances of guarantees, whatever the guarantees which the government have given in the current year. If there are any instances where the government have revoked the guarantee, any instances where the government have to pay the guarantee amount and all, any guarantee commission or guarantee fee, everything will be prepared in a statement format, and that should be presented in the financial statements. That guidance and all is given in IGS 1. Next part though, authority which is responsible shall apply this standard. The accounting authority is responsible for inclusion and presentation of the statement. Disclosure though, financial statements have to disclose the details of all the guarantees, reconciliation of opening and closing guarantees, any guarantee commission fees, etc. have also to be included here. Accounting and classification of grants in aid. Sir, grants in aid is nothing but, see, sir, government can definitely give grants to many persons. Sometimes central government may give a specific grant to state government, one state government to another state government, one government to any company also for that matter. Normals are companies. So this accounting will be applied even in grantor books or grantee books. For example, union government have given one grant to government company. Then union government will be called as grantor and government company will be called as grantee. This accounting will be applicable in both the books. In both the books as in grantor also and grantee also. Okay. Second thing though, practical solutions to remove any difficulties in adherence to the appropriate principles of accounting and classification of the grants in aid. Grants in aid may, whatever practical situations may, whatever practical difficulties which are there, this standard will remove all those things by giving more and more and more and more disclosure requirements. Sir, how to classify, how to account for different types of grants in aid and all will be given in the standard. That is not that much important from exam perspective because in study material also they have not given the content. This will apply to union government also and state government also, whether it have received or given. In grantor books also and in grantee books also, this standard is applicable. Next thing though, sir, who is the accounting authority? It is nothing but the person which prepares the financial statements of the government. Financial statements means annual finance accounts of the governments. Annual finance accounts of the governments. You just have to remember the names. If you remember the names, content you can aram copy paste. IGAS 1, guarantees given by the government. IGAS 2, grants in aid, accounting and classification. Accounting and classification of grants in aid will be covered in IGAS 2. Okay, fine. Next thing though, IGAS 3, loans and advances made by the government. Sometimes whatever the loans and advances which are given by the government, recognition, measurement, valuation, reporting, everything should be given in this standard. Everything have already given, whether it is given by the union and whether it is given by the state government, everything is covered. To ensure the adequate disclosure on loans and advances made by the governments, this applies to loans and advances for incorporation and presentation in the financial statements. Sir, how to present, how to measure, how to record, how to value, how to report, everything is covered here. The thing is common, this we have to follow cash basis. Another thing is loan will be recognized from the date when the money is actually disbursed, cash basis. Only when the entity has given the loan, at that time only you have to check. Not from the date of sanction. From the date the amount is moving from the entity, from that date only we have to do the accounting. Sir, if a loan is disbursed in installments, each installment will be treated as a separate loan for the purpose of repayment of the principal and interest. Important part. Accounting will be done on the date when the loan is actually disbursed, not from the date of sanction. If it is disbursed in installments, each installment will be treated as a separate loan. But sometimes syndication of loan can be happened. So syndication means if any competent authority ka approval is there, it may merge 2 or 3 loans as a single loan. Okay, fine. Next part, the loans converted into equity shall be treated as conversion. If any convertible loans are there, it will lead to reduction in an outstanding loan amount and entity will get the investments in equity. Next one, the debt assumption due to invocation of guarantees shall be treated as disbursement of loan. So IGAS 1 is there na guarantee. For example, central government has given any guarantee to any corporation. The corporation failed and government have repaid. If the government have invoked the guarantee, then it should be treating that as it have given loan or advance. Understood? Yes. Financial statements made disclosure have to be made of what is the carrying amount of loans and advances. Important standard IGAS 1, 2, 3. 1 to guarantees, 2 to grants and aid, 3 to loans and advances made by the government. Very, 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 very important. Okay, fine. Okay, so next standard IGAS 7. It deals about foreign currency transactions and loans or gains by exchange rate variations. Very simple. Sir, see, if entity government have taken any foreign currency transactions, any foreign currency loans or something like that, any transaction or even loans also, anything is covered, guys. Sir, what we have to do with the change in exchange rate? Change in exchange rate, though, whether sometimes forex gain or forex loss will be recorded. So how to deal with the presentation and all have been nicely covered in the standard. External debts and whatever the rate which is applied for the disclosure. Next thing, though, sir, which date ka rate you have to take in order to find out the forex gain or loss? Which date ka rate we have to take, even that also is covered in the standard only. Okay, again it follows cash basis of accounting and whatever the disclosure of transactions in foreign currencies. Next, loss or gain, exchange rate variation, even with foreign currency ka external debts is also being covered here. This will apply to foreign currency transaction of the union government as well as of the state governments also. Everything is covered here. One more thing you have to understand is this do not deal with external guarantees. Guarantees are not covered, but external borrowings are covered in this standard only. Okay, so whether it is loss or gain, that will be recorded as a revenue loss or gain. Okay, it will be charged to P&L account is what they are trying to say. Just go through this standard. Just go through this part, little bit important. Just remember the name, then you can aram se write the points. Okay, IGAS 7 is also completed. Next, we have to move to IGAS 9. These are nothing but investments made by the government in equity. It focuses on initial recognition, measurement, reporting of investments so that it have to provide a true and fair view. Just look at the highlighted points, guys. I mean, applies to investments made in different investee entities by the government. Here, what they will be saying is it will be treated as an asset because investment made by the government, it will be treated as an asset in the books of government. Okay, so if any loan is there, if it is converted into equity, then we have to convert whatever the advance which you have given into equity. But this will be done only on that date when the investee company have recorded that as an equity item. Okay, next part. So, sir, if any bonus shares are issued, na, that bonus shares ka cost we have to take it as nil. It will be applied subsequent to initial measurement at cost you have to disclose. At cost you have to disclose. ठीक है sir. IGS 10. public debt and other liabilities of the government. Just to go through this part, very simple. So whatever the public debt and other obligation of union and state government which is there, you just have to check. What they are trying to say is uniform and international practices have to be followed in order to ensure the transparency and disclosure. Every public debt and other obligations have to be reported on the basis of the face value. With respect to external debt, any changes of the foreign currency and all should also be reported is what they will be saying in this IGAS 10. Just remember the name and then aram se we can write. Next thing to IGFRS also you have to remember few points. Just go through these points, guys. Not that much important. See, if you observe IGFRS 1 though, with respect to presentation of financial statements, it will be mainly focusing that see, IGFRS will be applicable when accrual basis of system is following. When accrual basis of accounting is following, you just have to go ahead and do the IGFRS accounting. IGFRS to the property, plant and equipment. Very simple. So what they will be saying is at the time of recognition, how to find out the carrying amounts, what about the depreciation and what about the impairment and all will be covered in this IGFRS 2. If you check IGFRS 3, they will focus on revenue from government exchange transactions. Okay, from exchange transactions by government entities under accrual basis of accounting. IGFRS 4 to inventories के लिए, so whatever the thing, see, it is very simple. Expense including any write down to net realizable value. It is nothing but what they are trying to say is it is also like cost or NRV, whichever is lower only we have to the accounting. Even here also this applies accrual principle of accounting for inventories at the time of charging as expense also and depicting the closing stock also. Everything is covered in the IGFRS 4. Important this. Last one, IGFRS 5, if you observe contingent liabilities but other than guarantees and contingent assets. Just they will specify the name ka part only. Okay, one last thing which you have to remember is Controller General of Accounts, who is also called as CGA. You have to understand the difference between CAG and CGA. CAG is nothing but Comptroller and Auditor General of India, whereas the CGA is nothing but Controller General of Accounts. He is the apex accounting body. He is the principal accounting advisor to the government. His role is to consolidate the monthly accounts of all government of India and he should only report on fiscal deficit. Once this is done, C&AG will do the audit of the government along with the preparation of accounts of the government. Consolidated accounts of the government at union level or at state level. This will be acting as an input for the C&AG to prepare those accounts. Okay? So with this, we have completed everything with respect to government accounting. As I have said, what about this from this concept number 17, GASAB, everything is important. You have to go through IFRS 1, sorry, IGAS 1, 2, 3, 7, 9, 10. This you have to definitely follow. IGFRS, IFRGS also. Whatever the IGFRS are there also you have to follow. Just remember the names. Aram, so you can write the content. But in order to write that, at least you should have revised it 2 to 3 times. From MCQ's purpose also this is important. Even from theoretical perspective also compulsory questions they are going to ask. Okay? Fine. So the next theoretical topic, very important, which is nothing but recent developments in financial reporting. It is, if you compare with government accounting, it is quite a little big standard. But what we'll be doing is, let us not deviate that much from exam perspective. At the same time, we will not be leaving any areas also which are important from the examination. So what I will be doing is, I will be doing a very in-depth revision. So some points, though, you have to do multiple revisions, only then you will be more comfortable. Okay, fine, sir. So this is nothing but, normally we all know that financial reporting is nothing but communicating the financial results of an entity to the users of its financial statements. Financial information as in whether the company is having, whether the company or entity is having how much profits, what is the financial position of the entity. And the traditional financial reporting is only focused on this much. It mainly focuses only on financial results of the entity. But if you observe, many developments have taken place in this financial reporting. Not only just the financial figures, there are many other aspects which an entity have to consider in order to communicate to the users of the financial statements. That is the core crux of this chapter. In addition to financial aspects, there are many other aspects to look into. So this we will be learning one by one, one by one, one by one. ठीक है, so this part तो you can just आराम से check the things, but the thing is in this chapter तो we will be learning 4P bottom line reporting, business responsibility reporting, sustainability reporting and GRI, global reporting initiative, integrated reporting, environmental, social and governance, economic value added and market value added statement. These two are nothing but practical concepts. 100% they will ask a 7 mark question from these two areas, either this or this. Human resource reporting, complete theoretical, quarterly earnings and call management, and last one to reporting through XBRL. All these are very, 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 very important theoretical aspects. They may focus on anything, guys. We can never imagine. They may ask this 4P bottom line, sustainability reporting, integrated reporting, BRR, VRR, ESG, reporting through XBRL, and this quarterly earnings call management. They can ask anything. So we cannot take choice. We have to at least read all those aspects at least once in order to get a proper comfort over the things. So without any further delay, let us quickly start with this 4P bottom line reporting. In order to understand this 4P bottom line reporting nicely, there is something which is called as triple bottom line. It is also a kind of a reporting tool kind of a thing. It is nothing but, see, you just have to remember triple bottom line. Bottom line normally refers to, if you observe any statement of P&L, if you observe any statement of P&L, bottom line is nothing but the profit of the entity. Bottom line is nothing but the profit of the entity. So here what they are trying to say is triple bottom line is nothing but a framework which measures a company ka commitment to sustainability by evaluating three key areas. First one to three P's, basically it is called as three P's, guys. It is mainly called as three P's. First P to profit, second P to people, third P to planet. Profit, people, planet. Profit, people, planet. P refers to economic, another P refers to social, and last P refers to environmental performance. Here what they are saying is first P refers to financial health of the organization, how much profits the entity is earning, what is the revenue of the organization, and what is the overall economic impact. Second P to see, it mainly focuses on employees, its creditors, society as a whole. It includes factors like labor practices, community engagement, and social equity. The main focus of this people is how satisfied the people are. Okay, how satisfied the people are. What are the employee practices? What are the community engagement? How much care the entity is having towards its creditors? Okay, all these things will be covered in this aspect. So not only just financial aspect, you have to add other aspects also. For example, like social performance also you have to measure. And not only this, guys, another thing which is called as environmental performance. It's this assesses the ecological footprint of the company, which means how the entity is viewing the environment. See, it is give and take policy. You should not always take from the environment. Rather, you have to give something to the environment. So how effectively the waste management is as being taken care by the company and all. How efficiently it is contributing the sustainable environment. That will be measured in terms of this third P, which is called as planet. This triple bottom line is nothing but it will be not only evaluating financial performance, that is profit. Other than this, people is also there and planet is also there, which means environmental performance, economic performance, and social performance. Everything will be measured. This is called as triple bottom line approach. Sir, but triple bottom line is not there now. This is 4P bottom line. 4P bottom line is nothing but extension of the triple bottom line. Extension of the triple bottom line. Sir, earlier to 3P's money, people. Next, planet, profit. Other than this, another P is also there, which is nothing but purpose. Oh, purpose money, if you observe, financial performance is there, social performance also, environmental performance also, and last but not the least, spiritual performance also. Sir, spiritual performance means here they will be focusing on well-being of the entity, well-being of the employees, how joyful an employee is feeling working in the company, how connecting, I mean, how the employees and company is being connected. All these areas also will be measured. Nowadays, companies are focusing even this also, guys, not just the profits. They are mainly concerned on people also, purpose also, and not only this, environment also along with the profit. Profit is must. Without profit, it cannot survive only. But the thing is, there are many other aspects also which the companies should look into. Okay? Yes, so next thing, a little bit important. See, the second part is importance of quadruple bottom line reporting. Little bit important, so you have to check. First one though, integrated reporting. Integrated reporting means what they are trying to say is now we have to combine our financial information, our financial measurement with non-financial aspects also, which provides an integrated reporting framework के लिए one basis will be set. Further details regarding integrated reporting will be discussed further. Next thing तो stakeholder का engagement, different needs, different stakeholders का different concerns and different needs. If you cater all those things, organization pay, it will bring trust. Now the entity, the employees will feel the ownership that company is doing this much for us. So obviously we also have to contribute, we also have to do more and more amount of hard work. So this is the psychological situation of the employees. Understanding or not? Yes. Another thing, the long-term sustainability. Short-term, though, anyways you can work. Just by focusing on the profit, short-term pay, anyway you can succeed. But the thing is, if you want a sustainable long-term growth, then you have to definitely focus on other piece also other than the profit. Next part, though, informed decision making. Informed decision making means long-term strategies को frame करने के लिए whatever the organization का values and long-term goals which are there, everything should be aligned with the strategy. In order to understand this, in order to take the perfect decisions at the perfect times, this QBRL reporting is the crux. Okay, yes sir. Next though, benefits of quadruple bottom line reporting, little bit important from exam perspective. So you have to write LIERS. You have to remember this like liars. Sir, what is the meaning of liars? First L though, license to operate. See, if public are starting to view the company as it is taking care of the employees, it is taking care of the environment, it is taking care of the purpose of the employees, many people, communal support will be gained to the company. Generally, employees will be treated as resistance to change. Whatever change you have, what should I say, proposed, employees will definitely say no. But if the companies have focused on these aspects, for example, people ka aspect in quadruple bottom line ka reporting, then obviously employees will be like, okay, company is ourselves only. So if they are doing something that is obviously for our good only now. So like this, it will be gaining some communal support in the internal teams, which will foster a very healthy relationship. So this is for L, which is nothing but license to operate. So next I is nothing but improved access to investors. Now investors are also not only focused towards the profit, they are more happier, and because its scope is being widened to include environmental aspects also, social factors also, which means whatever the investor ka expectations which are there, all those things are exactly matched by this QBRL ka reporting. I is also done, sir. Sir, E is nothing but enhanced reputation and brand. If companies are that much focusing on social, environmental, and economic practices, obviously the way the stakeholders will view the company also will keep on changing. For example, if you observe Tata, sir, how much care the Tata is taking towards its employees, how much care the Tata is taking towards its society and all, if you understand, it will obviously bring a positive reputation and brand for the company, which in the long run, it will be helpful in sustaining, in having the sustainable growth of the entity. So next R for retaining employees. Employees will be obviously getting the feeling that entity is ours. They will be having a ownership over the company, because of which they will never go to new company. Second, last thing though, supplier status. Supplier status means whatever the suppliers can there now, that suppliers pay you are having a high preference with your competitors. If you compare, Suppliers pay if you have focused more on public includes even suppliers also, people includes even suppliers also. So if you are giving more importance or more priorities to supplier, obviously supplier also will be giving you an upper hand na. When if you compare, if they compare you with your other competitors, obviously they will be giving high, what should I say, high preference to you. Yes, it is correct. Next thing though, this is done. Benefits of QBRL reporting, very, very important. You have to remember like this. Liars. Sir, liars may L for license to operate, I for increased attention, improved access to investors, E for enhanced reputation, R for retaining employees, and S for supplier status. Okay. Yes, sir. Next part, sir. Prerequisites for implementing QBL reporting. Prerequisites means without these things, na, QBRL cannot be implemented. Without these things, QBRL cannot be implemented, sir. First one, the commitment to senior level management. Senior level management should commit that QBRL reporting should be done no matter what. If the support from them only is not there, aram say you cannot implement a successful QBRL ka reporting. ठीक है. Yes, sir. Another thing though, QBRL reporting must align with the company ka strategy. If the strategy is something, if the strategy is cost cutting, if the strategy is cutting, the company will definitely may not invest more amounts in this QBRL ka reporting. Therefore, if the company wants to report on these aspects, obviously there are high budgets also, which means if the company ka main objective is only cost cutting, it cannot be achieved. Therefore, it should obviously align with the company overall business strategy. Next thing though, I'm saying very easily that, sir, we have to focus on people, we have to focus on environment, we have to focus on purpose of the employees and all. It is not that much easy. Huge data will be there. You just have to process that much data. Okay, you should have enough resources to what should I say, to measure all those things and all. So that requires huge amount of planning and huge amount of investments will be there. So what they are trying to say is a complete commitment from the senior level management only is the key. If it is not there, things will not work. Senior level management ka commitment should be there. And second thing though, significant resources should be required, and the half-hearted effort leads to more issues than not adopting QBRL only. See, rather you don't adopt, still it is fine. But if you are doing half-heartedly, it will not give much results. Okay, fine, sir. Understood. Last part though, strategy for implementing QBL reporting, or it can be asked even like this also, critical issues to address. You can remember like this. There is one popular Telugu word which is called as Radu. Okay, you can remember like this. See, this QBRL will not work when, sir, R for resource and cost assessment. You have to establish the proper resource and necessary budgets required. Otherwise, it will not be successful. It will not be successful. Then A for awareness should be there. Whatever the legal implications will be focused if you are trying to report this QBRL. If any confidential data is being exposed or kind of a thing, you just have to even concerned about the legal implications also. So D for definition of the role. Role has to clearly define, sir, what is the meaning of QBRL, how the entity is viewing this QBRL, and all should be clearly defined. And you for understanding of the risk. And you for understanding of the risk, which means risk understanding. So if I adopt this QBRL ka reporting, what is the risks which are involved and all should be clearly communicated and should be clearly understood. Okay, so next concept though, key challenges for implementing QBL reporting. Very simple, ASAP. If these key challenges are identified now, you have to rectify them ASAP. You have to assess them ASAP. You have to respond them ASAP. So what is the meaning of ASAP? A is nothing but awareness. You should have proper awareness. It is not that much easy as I am saying. Sir, next S though, S is nothing but a stakeholder ka requirements you have to understand and you have to respond in that manner. So whatever stakeholders are being expecting, company have to deliver that thing. And another A for alignment. This I have already explained, sir. Company ka strategy and company ka QBL reporting should be aligned. Only then things will work. Last thing though, performance indicators. Last thing though, performance indicators. Sir, even though everything is followed, the company should be able to measure that thing na. The company should be able to measure the employee ka satisfaction. The company should be able to measure the employee ka well-being and all. Only then this reporting can work. So this is also a very key challenge. So ASAP mane awareness, stakeholder ka needs understanding is a very difficult task, and another A for alignment, and last may P for performance indicators. P for performance indicators. All these are key challenges. To conclude this QBRL reporting, the important aspects which you have to look is this benefits of 4P bottom line reporting, which is nothing but layers. Sir, layers may L for license to operate, I for increased attention or improved access to investors, so E for enhanced brand and reputation, and R for retaining the employees, and last may S for supplier may preference will be given. Yes sir, understood. Next, prerequisites may senior level management ka complete focus should be there, complete attention, and it should be committed properly. Next thing, to significant resources will be involved, and next thing, to strategy for implementing QBRL reporting, it is nothing but RADU. R for resource and cost assessment, A for awareness, and D for definition, and U for understanding the risk. Understanding the risk is the key. Key challenges to ASAP. ASAP means A for awareness, S for stakeholder requirements, and another A for alignment, and P for performance indicators. With this, finally, we have completed QBL reporting. Okay. Next thing, though, very very important, which is nothing but sustainability reporting and global reporting initiatives. These two aspects, so let us combine and let us read these things. Sustainability reporting and global reporting initiative. Okay, fine. So next concept is sustainability reporting and global reporting initiative. Even this sustainability reporting also, whatever the three P's which we have covered earlier, which are people, planet, and profit, the same things will be discussed here, but with different names. People stands for social sustainability, and environment, that planet stands for environment, and profit stands for economic sustainability. Social May focuses on building positive relationships with employees and customers and communities, enhancing the reputation and support. The crux is very simple. Sustainability reporting means if you want an organization to grow on a long run basis, it should develop this sustainability reporting concept. Understood. Yes. So this environmental is nothing but you have to address the resource usage, waste, and emissions which are leading to cost reductions. Economic sustainability is nothing but you have to focus on this efficiency and profitability. Sir, what is the exact meaning of the word sustainability reporting? It is nothing but whatever the organization economic, environmental, and social impacts which are there, it have to publicly disclose all the things. So whatever the impact which it is being creating, whether it is public, whether it is a profit, and whether it is planet, everything have to be disclosed normally. Everything have to be disclosed to the public, which means, see, the main crux of the concept is very simple. It is not the financial results which have to be viewed separately without having any connection with the other aspects like people or a planet. Okay, it should be viewed comprehensively on a holistic manner. If you want to see the actual real development, you just have to also check this sustainability reporting as well. Understood? Yes. So next part though, that's what they are saying. It helps reports organizations manage the impacts, integrate the sustainability into strategies. And not only this, overall reputation also will be improved, and whatever the sustainability which are there now, that will be integrated into their strategies, and it will improve in an overall governance aspect also. Understood? Yes. Sir, what is the exact meaning of this global reporting initiative? Guys, this global reporting initiative is nothing but it is a kind of a reporting framework on whatever environmental and social performance which is there. See, this profits though already our traditional reporting itself will be focusing. Sir, but what about this environmental and social? In order to provide a framework for this, what they have gone ahead is they have introduced this global reporting initiative. Main focus of it is very simple. Whatever material and whatever it is important, whatever is having the capability of influencing the stakeholder decision, it provides a holistic reporting kind of an initiative for this environmental and social performance. Okay, understood. Next part though, sir, what is the benefit of this sustainability reporting? Another important question. Benefits of sustainability reporting, you have to understand, you can remember like this, it is lullaby. Okay, it is lullaby. First L for long term focus. First L for long term focus, and next U for understanding the risk. Long-term focus means, I have been saying this number of times, if an organization needs to succeed in a long run, sustainability is the key, which means a long-term focus should be there. Second thing though, U for understanding the risk, and another L for linking of performance. You have to link the financial performance as well as non-financial performance also. Next, E for efficiency ka gains. See, if you do this kind of an activity on a repeated manner, obviously many cost cuttings will be done, which overall improves efficiency. B for benchmarking. Benchmarking is nothing but comparing with industry best practices. Comparing with industry ka best practices. You have to compare with the leader. Understood? So these five are nothing but benefits of sustainability reporting. These are called as internal benefits, and some external benefits are also there. To summarize once again, internal benefits are nothing but lullaby. Lullaby means L for long-term goals, U for understanding the risk, another L for linking the performance, and E for efficiency gains, and last may B for benchmarking. Last may be for benchmarking. These are nothing but internal benefits. Sir, what is the meaning of external benefits? External benefits are nothing but mitigation will be impacted, which means if any negative kind of a propaganda is being circulated on the company, whether it is environmental or social or governance, if entity reports this sustainability, obviously it will be proving what they are thinking, whatever the negative perceptions are there with respect to that company and all will be proven wrong. Next thing though, enhancement will be reputed, reputation will be enhanced, and value perception means how the public are viewing that also will be keeping on changing. Understood? Yes, very important. Internal benefits and external benefits. Internal benefits to lullaby, long-term focus, understanding the risk, linking the performance, E for efficiency gains, and B for benchmarking. External benefits money, mitigation will be impacted, and reputation ka enhancement, and last may value perception. You have to focus all these three things. Yes, sir, we have to focus all these three things. So sustainability reporting ka part is also completed. We have understood the meaning of sustainability reporting, publicly disclosing all the policies, and next we have understood the global reporting initiative also. Main focus is towards the materiality and the benefits of sustainability reporting also. We have covered our internal benefits to lullaby, external reports to reputation enhancement, and impacting the mitigation, impact the mitigation, and last may perception of the value will also be changed. Okay, understood. Sir, sustainability reporting is also done. Guys, I have been saying I will be giving an overall idea of what the things should be. But the thing is, you will be replicating at least 85 to 90% of content only after having multiple readings only. You have to definitely go through the multiple readings. There is no shortcut, guys. Understood, sir? Yes, sir, we have understood. Next thing though, business responsibility and sustainability reporting. How an entity is contributing to the sustainability reporting, how the entity is treating this sustainability reporting as a responsibility. This will be covered in the report, which is called as business responsibility report. SEBI have mandated top 1000 listed companies to prepare something called as business responsibility report along with their normal financials. It is very much mandatory for the top 1000 listed companies to include this business responsibility report also, because not only for the purpose of shareholders, nowadays companies should cater to wider needs of the other what should I say, other stakeholders also, which means it should also consider social and environmental impacts also, not only financial, especially for publicly listed companies. So yes, sir, what about other companies? Have they, if they want, have they go ahead and disclose this BRR voluntarily? Answer is yes, they are fully allowed to do so. Okay, the thing is how the entity is viewing this sustainability reporting as a responsibility and all will be communicated through that business responsibility report. Sir, how exactly? I think this is nothing but a framework or a model type of a thing as to how this business responsibility report should look like. It comprises of 5 sections. Sir, first one to general information about the company. SIN will be mentioned, corporate identity number, company name, registered address. All these five may see this first may general information about the company they will mention. Sir, what are the key products of the company? How many business locations are there? national and international, if there are any, and whatever the market served, everything will be reported in segment number 1, section number 1, section number A. Section B, the financial details. Sir, how much is the turnover, how much is the capital, how much is the profits, and how much is, what should I say, CSR, how much activities are funded by CSR, what are the activities, everything will be, everything with respect to financial details will be covered in section B. Sir, section C may other details like, sir, if there are any subsidiary companies, if they are also participating in the business reporting or not. Sir, for example, Tata is there. Tata ka suppliers are also participating in this business reporting ka initiatives. If details like this are also there, it will be included in section number C. Section number D, though, business responsibility ka information. There will be one director who is responsible for this business reporting ka initiative, and whoever is the head is there, his details also will be mentioned. Principal wise business reporting policies with respect to something which is called as national voluntary guidelines. National voluntary guidelines. Just a moment, guys. National voluntary guidelines with yes or no responses and explanations for any no answers. Section E may, they will be focusing on principle wise performance. These national voluntary guidelines may, there are 9. All those 9 voluntary guidelines, so company should respond either yes or no. If it is yes, then there is no problem. If it is no, the company have to specify the reasons also. Understood? Yes. So to conclude, business responsibility report contains 5 sections. First section to general information. Second section to about the financial details. Third section to other details. Fourth section to business responsibility information. Fifth section to principle wise performance. So do we have to remember all these principles? Is just remember these names. Principle 1 to ethics, transparency and accountability. There is no need for you to remember all these things. It is not possible also. Okay. Second thing to provides safe and sustainable goods and services. Third thing to promote the well-being of employees. Next to business should respect the stakeholders. Next things are respect and human rights. Make efforts for the protection and restoration of the environment, and engaged in influencing public and regulatory policy to do so in a manner that is responsible and transparent. This is also fine. Promote the inclusive growth and equitable development. Next thing to provide value to consumers in a responsible manner. This is also understood. Okay, fine, sir. Next aspect. Sir, what are the contents of this BRSR which is there? Business report, sustainability reporting, sustainability report. It is mandatory for top 1,000 companies. This also we have understood now. Business responsibility and sustainability reporting includes the following broad categories. Sir, first thing to general disclosures, details, product, operations, employee information, CSR details, holding subsidiary and associate, transparency and compliance details. Management and process disclose also, which is nothing but national guidelines on responsible business conduct, NGRPC, and principal wise performance disclosure also have to be given. Sir, this BRSR is also separate report. See, this BRSR is also separate report, and this earlier we have studied about BRR, which is nothing but business responsibility ka report ka conditions and all. Sustainability report also we have just understood, and we have a combination of this business responsibility and sustainability ka report. It also contains the same 9 principles of BRR report, which is nothing but national voluntary guidelines. 9 national voluntary guidelines are exactly copy pasted. So with this, we have even completed the sustainability reporting aspect as well. Sustainability reporting and business reporting aspect also we have completed. Okay, fine. Okay. So next concept is this integrated reporting. Guys, just observe the word integrated. Integrated is nothing but, sir, we have to consider both financial also and non-financial information also to explain how an organization strategy, governance and performance creates the value over time. It is a comprehensive view of value creation by considering environmental, social, and governance factors within the context of the organization external environment. See, it is not viewing financial aspects separately and non-financial aspects separately. It is a combination of both. It is an integration of both financial and non-financial. How an organization strategy will create value over the time is clearly explained there. Sir, there are something which is called as objectives of integrated reporting. You can remember like this. CAR, thank you. CAR, thank you. CARTQ. Sir, C means cohesive reporting will be promote it. It will foster an unified approach which incorporates various reporting strands addressing all factors affecting an organization का value creation. Organization का value creation में many aspects are being involved from multiple perspectives, from multiple angles. We are making a reporting kind of a thing, which means it will be fostering an unified approach. So next, A for accountability will be enhanced. A for accountability will be enhanced. Sir, public will be feeling more accountable, whether it is financial or human or social, and their interconnections also will be increased. Their capitals will be strengthened. Capitals necessarily need not be only in money. Human capital also will be there. Correct? Those kind of intellectual capital and all we will be learning a little bit later. Sir, R for if you observe, reporting norms will be established, and T for integrated thinking. Thinking ka integration also will be done, and Q for quality. Information ka quality will also be maintained. This is nothing but objectives of integrated reporting. Sir, C for cohesive reporting, A for accountability, and R for reporting norms, T for integrated thinking, and Q for information quality. These are nothing but objectives of integrated reporting, little bit important. Next thing though, sir, value creation process, as in you have to understand, sir, this integrated reporting framework identifies 6 types of capitals. It is not only financial always. That's what I'm saying. Financial will be there definitely. Sir, how much debt is there, how much equity is there. Next thing though, manufactured capital. Next thing though, manufactured capital is it is nothing but, sir, what is the inventories which are there? What is the long-term tangible assets which are there? Okay, how the accounting treatment should be and all will be clear-cutly explained in this manufactured capital ka portion. How the entity is being valued, value added from this manufactured capital perspective. So next thing to intellectual capital. Intellectual capital is nothing but how much intangibles the entity is possessing. Knowledge-based intangibles, intellectual property rights, patents, copyright systems, procedures, everything will be covered in intellectual capital ka part. Sir, next thing to human capital. Sir, human capital में skills, competencies, experiences along with their motivations. This also will be covered. So next thing to social and relationship capital. Social and relationship is nothing but, see, this human capital is nothing but employees. Social and relationship is nothing but networks. Networks the employees are maintaining. Networks the company is maintaining. Whatever the communal clashes and all, if they are bare minimum, then the entity will be, what should I say? Then the entity will be focusing in the long term. Sir, natural capital is nothing but how the resources are being from the organization ka perspective, whether they are renewable, whether they are non-renewable, and how, I mean, what are the processes which will be providing the goods or services. These 6 types of capitals are very, 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 very important. They may ask a question like this. So you have to check this. Integrated reporting specifically identifies 6 types of capitals: financial also, manufacturing also, intellectual, next people, which is also called as human, social, and relationship, and last is nothing but natural capital. Very, 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 very important. Other aspects you can aram se check the things. Okay. Next though, integrated reporting guidelines you have to check. You can read this on own. This is more like a self-explanatory kind of a thing. So this integrated report guidelines you just have to go through. Next, guys, this will be covering, sir, challenges to implementing the integrated reporting. Sir, while implementing now, there are many, what should I say? What should I say? Implementary issues. While executing, there are some issues. Sir, first one to assurance. I can say that my human capital is this much, but who are there to certify? Who will provide an assurance that whatever I'm saying is correct or not? I may provide integrated reports, but that much technology, sir, who is there to certify? Audit cannot be done. So that much advanced standards are not all being developed. So it is not that much possible. Next thing though, that's what I'm saying. Global standards are not there. Integrated reporting standards are not there. Therefore, it is very much hard for the people to give a report on that and to explain and to, what should I say, give an assurance also. It is not that much simpler. Next thing though, it is highly impossible to quantify. Highly impossible to quantify. It is not impossible. It is, I mean, highly possible. Okay. The thing is very simple. Sir, it is not that much easy to find out, sir, how much human capital, how much intellectual capital. It is not that much easy, guys. Lots of analysis, lots of cost, lots of time, lots of energy will be involved in all those things. So That is the concept of integrated reporting. Ultimate crux you have to remember is financial metrics and non-financial metrics will be integrated, and six kind of capitals you have to remember: financial, manufacturing, intellectual, human capital, next thing to social and relationship capital, and last me natural capital. Little bit important. Integrated reporting, very very important, guys. Next important concept, so we have to move to the corporate social responsibility. Okay, so the next concept which we will be starting is nothing but corporate social responsibility. Guys, this corporate social responsibility ka working is pretty simple. See, entity have taken so much from the society. Now it's the time for the entity to repay back something to the society. In Srimantudu, if you remember, there is one popular dialogue of Mahesh Babu which will be saying like, okay, ఇప్పటికే చాలా తీసుకున్నారు ఇప్పుడు తిరిగి ఇచ్చేయండి అంటాడు కదా. So in the same manner, entity have taken a lot from the society. Now it's high time for the society, it's high time for the entity to repay something to the entity, to repay something to the society, by the way. Okay, fine. So it is nothing but the commitment of organization to contribute positively to society, reflecting their accountability towards the well-being of the communities and the environment. So why this CSR is introduced is very normal, Sati. It is quite logical because companies have to show their well-being of the communities and the environment to the public. See, if they keep it voluntary, most of the companies will obviously fail to do that. So that is the reason Companies Act may they have introduced one provision. It will mandate certain companies to definitely contribute to this corporate social responsibility. Applicability ka part though you anyways know in your law. Correct. So here what they are trying to say is we have section 135. It mandates few companies to spend a minimum percentage of their profits on CSR activities. It is like average 2% profit of the average profit for the last 3 financial years. 2% of the average profit for the last financial years. That was the minimum amount which a company have to spend towards this corporate social responsibility. And not only that, Schedule 7 may it will be prescribing few activities wherein if you adhere to these activities, if you contribute these activities, or if you have invested, if you have did these type of activities, then it is said that your CSR ka obligation will be satisfied. And another thing though, companies corporate social responsibility policy ka rules also have inserted, and it will provide the guidelines for the formulation and implementation of the CSR policies. Okay, fine. So CSR is applicable for those companies in which any of the limits got satisfied. For example, if net worth of the company is more than or equal to 500 crores, turnover more than or equal to 1000 crores, and net profit more than or equal to 5 crores in any of the last 30 financial years. If any of this limit got satisfied, if any of this limit got satisfied, then the company should have to mandatorily contribute to CSR. Now the question is, sir, how much amount and all will be slowly understanding. The thing is, whatever the companies which for which this threshold limit got crossed, then what we have to do is you have to constitute something called as CSR committee. This committee may at least three directors should be there, and one director though compulsory he should be independent. At least even two also can be independent, three also can be independent, but the thing is at least three should be independent. Sorry, at least one should be independent and minimum three directors should be there. Understood? Yes. Sir, what is the role of the CSR committee? CSR committee ka role is pretty simple. So whatever the CSR activities which the company have to follow, and whatever the policy which is there, and how much amount it should be expending and all, it should be, it should be above the limits. It should not be within the limits, correct? Because that is the minimum amount of spending. Even if it exceeds, that is totally fine. But if it is within the limits, then it is a kind of, what should I say, compliance issue will be there. Correct? So it have to regularly oversee the implementation of the CSR policy. It is not just that if you have decided to spend this, if you have decided to contribute, these things will not be happened, correct? You have to actually go, you have to actually implement the same. So proper implementation or execution related task will be taken care by the CSR committee. So next thing though, what is the role of board in CSR? This board is there. Now this board ka responsibility is nothing but CSR committee, whether it is what should I say, properly constituted or not. So what exactly is the composition? Whether it is properly followed or not, that will be disclosed by the board. And next thing to approval. Approval means whatever the CSR policy which the company have to follow. Committee should recommend first of all, and whether that is in line with the company ka overall strategy or not, whether other stakeholders agree with that corporate social responsibility ka part, or they want to invest in some other activity, or this kind of approvals and all, if at all any required, then that will also be done on the basis of the CSR committee ka recommendations. Implementation though, it should only check, board only will be checking whether all the activities have been carried out nicely or not. And last though, expenditure means minimum of 2% of average net profits during the 3 previous financial years. If you are checking the limit for 25-26 previous year financial year, then you have to go for 24-25, 23-24, and 22-23 ka 3 years ka profits you have to take. And average of this 3 years ka profits may at least 2% you have to invested towards corporate social activities. And next thing, so sir, what is the meaning of corporate social activities? What all the activities which I can invest? What all the activities which I can do? The things are pretty simple. First thing though, if you are doing anything to eradicate hunger and poverty, that will be considered as, what should I say, corporate social responsibility. Next thing to education ko promote karne, in order to promote the education, whatever the activities which you are taking up, that also will be forming part of CSR. Next thing though, what should I say, gender equality and women empowerment. If you are investing, if you are doing any kind of an activity, so whatever the amounts which you are contributing, that will also qualify as CSR ka expenditure. Child mortality and improving maternal health, even for combating diseases like HIV, AIDS, malaria. Environmental sustainability, guys, this you can just go through. If you do any of these activities, it is said that your CSR ka responsibility got satisfied. Understood? Yes. So CSR spending का amount तो कितना? CSR spending is nothing but at least 2% of their average net profits from the last 3 financial years. Sir, what if I have spent excess? If you spend excess, you can carry forward. For example, sir, I have spent 5% of net profit for the current year. How much? I mean, 5% of net profit for the average profit of last 3 years. Then how much excess I have spent? I have spent 3%. So this 3% का excess can be carried forward. This 3% का excess can be carried forward. Sir, what about unspent amount? Unspent amount means, example, 2% I have calculated and the amount is 100 crores. Out of which I was able to expend only 40 crore. Sir, what about balance of 60 crores? 60 crores should be transferred to a separate account within 30 days. And from the date you have transferred now, that should be spent within next 3 years. That would be spent within next 3 years if that is relating to any ongoing project. But if that is not related to ongoing project now, it should be transferred to a schedule 7 ka fund. And the expense should be incurred within 6 months of the financial year ka end. 6 months within financial year ka end. Same will be applicable even for the unspent amount relating to ongoing project also. Wait for 30 days of the financial year ka end and you have to spend within 3 years. Understood? Yes, this is little bit important, so you have to keep focus. You have to check this part only. Quantum of CSR spending. Sir, what will happen if I incur more? And what will happen if I incur less and all? You have to check. Administrative overhead should not exceed 5% of total CSR expenditure. Administrative overhead means what? Salaries, for example, any you have employed some supervisor kind of a thing. So whatever the salaries which you are paying, that though should not, that will not be considered as CSR if it exceeds 5%. We will be taking only maximum 5% only. Next, surplus from CSR activities means any surplus should not be considered in business profit. Understood? You have did one CSR activity. Assume you have got some profit. That profit though should not be included in your business. That profit should not be transferred to your business. Rather, it should be reinvested in your books. Rather, it should be reinvested towards the CSR activity, not books, towards the CSR activity. Understood? Yes. Or it should be either transferred to unspent CSR account or schedule fund within 6 months. This time limit is also a little bit important. Very. They may ask any MCQ with respect to this unspent amount ka thing. Next comes accounting for CSR transactions. Quite normal accounting. If any cash expenditure incurred, so cash will be debited and cash will be credited and CSR expenditure will be debited. Understood? Sir, for any CSR incurred in kind. Incurred in kind means, I assume I have purchased something, I am giving that purchase. Assume I'm having any inventory, I'm giving that inventory. So CSR expense will be debited and credit I have to give either to purchase or cost of goods or inventory, whatever it is. So what about unspent CSR expenditure? Expense you have to book. Expense you have to book, but balance amount though should be deposited in a fund. This will be shown as a liability. Understood? Yes. All these transactions you can aram se just check the things. So here what they will be saying is CSR expenditure ka disclosure and accounting you have to check. Whatever the expense which you have incurred now that should be disclosed in the statement of PL. Unspent CSR expenditure to liability for unspent will be recognized in the financial statements. Excess spending should be carried forward to the next year. If adjusted, any future obligations and asset must be recognized for the excess amount. Guys, very basics accounting. Currently, I will be creating any liability. Next time, if I incur expense, then I will be setting off this liability against that expense. Understood? Yes. So what about non-carried forward excess? If you want to non-carry, I mean, if you don't want to carry it forward, which means next year also you will be obviously complying with the 2% requirement. If you don't want to carry it forward, then whatever the expense which you have recorded now, that entire amount will be treated as an expense. If you decide to carry it forward, then you will be creating, I mean, then if you decide to carry it forward, then asset will be there in your books. But if you don't want, but if you don't want, what they will be saying is, you can aram se book the entire expense in the current year only. If you have spent less, that will be shown as a liability. If you have spent more, that will be shown as an asset provided if you want to carry it forward. Otherwise, you can recognize the total expense in the current year only. Basics are accounting. You can aram se just go through this part. Okay, these three: unspent, excess, non-carried. Little bit aram se you can go through here and there. But according to me, this part is important, guys. Quantum of CSR spending is very, 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 very important. And next thing, though, this board ka constitution also, if it is law, it will be important. But since this is CFR ka subject, this applicability to little bit you have to remember. 500,000 500,000 net worth 500, turnover 1,000, net profit 3. But this for the last 3 financial years. Okay. Yes, sir. Next. This CSR reporting requirements you can aram se check. Rule 8 ka reporting requirements though, what they will be saying is, first of all, what is the policy overview? This should be explained. What is the committee ka composition? Sir, what is the average net profit? What is the expenditure which they have incurred? What is the total amount? Any unspent and any excess amount. Unspent amount ka reasons also it should maintain. And CSR committee responsibility statement also and disclosure also. I think they may ask this. This you can aram side. Sir, what is the policy? How much amount they have spent? What is the average profit of 3 years? Okay, so how much amount they have actually spent? So CSR spending details, everything should be recorded here. Understood? Yes, sir, we have understood. Next part though, CSR is done, guys. According to me, this you have to focus, and then quantum you have to remember, and applicability of the CSR also you have to go through. Okay. So next thing to environmental, social, and governance. Environmental, social, governance. You just have to check these things. Environmental refers to, sir, what is the impact? What is the impact which is created by the entity on its environment? Which means how effectively the company is managing the waste and how effectively the company is taking measures in order to reduce this pollution. Climate changes because of the products which you are using, because of the chemicals which you are using. If there are unfavorable changes in the climate, entity should do something to correct those things. So how the entity is viewing environmental effect will be covered under this aspect. Social as to we have been discussing from the start itself. Social includes the maintaining relationships between employees, creditors, suppliers, communities, labor practices. So human rights, how you are protecting. Diversity as in different people from different religions, different languages, different traditions. Every person will be combined. So how effectively you are respecting all their religions. Because if you do these kind of an activities, there is a very low chance of having communal clashes and all, thereby ensuring welfare, thereby ensuring, what should I say, any conflict-free environment. Conflict-free working environment is the key for an entity ka long run success. And next part, though, they will focus on this governance aspect. Governance means, sir, who is the actual leader behind the company? So the track record of that CEO, the leadership style of that CEO or CFO or whoever it is, so how the board is structured, whether they all are qualified people or not. Qualified can come from technicality, qualified can come from educational qualification, qualification can come from experience or whatever background which you are living and all these things will matter. So it will emphasize transparency, accountability, and alignment with stakeholder interest, because half the top management is obviously the lower management also will adopt that way. They will improvise, they will imitate the top management. So if your top management is perfect, there are high chances that our low level of management also will imitate the top level management, and it will ensure overall success in the long run. But if it is reverse, if it is vice versa, top management itself is a kind of fraud ka people. Okay, so top six financial crimes. Whoever persons have committed, assume they all have formed one company. If the top management itself is like that, then you can only understand what is the future of the company. How the bottom level management ka thinks, their psychology and all will be like, okay, our top management ka boss itself is like that. So we will also be like that only. Who will question us? If they question us, we will just see, okay, you are questioning me. We know about you. Like that, bottom level management may reply. Okay, because of which governance is the key aspect. So these criteria, how environmental, I mean, how the company is doing environmental aspect and how the company is doing the social aspect and what are the governance principles and all. These three will drive the financial success, not only financial, the overall sustainable success of an entity. Okay, yes, sir. So next thing though, importance of ESG reporting. Importance of this ESG reporting जो है ना, it is crucial for several reasons. This you have to very important. So this you have to definitely go through. First thing though, shareholder value may it will be it will be creating too much so much value. The reason is, if the shareholders are viewing the company is having best environmental practices, best social and best governance practices, obviously belief in the shareholders will be high. If such beliefs are high, obviously the shareholder value, which is nothing but share price, will obviously be increased. Its risk and opportunities can significantly affect. If the company the governance is not that much good, obviously the expectations of the investor will fall, thereby resulting in decline in the shareholder value. Next thing to investor demand. That's what I'm saying. Any investor who want to increase their investment with the companies, if the company is prioritizing the environmental and social responsibility, the investors will understand, okay, the company is aiming to sustain in the long run, because of which it is building the reputation, because of which it is building the image and all. So that is the reason investor will demand. Investor demand will increase, which means more and more. Whoever the existing investors are there, they will keep on investing in more and more amounts. And even if you are a new investor, still it will be a very, what should I say, attractive sort of option for you to make investment in such companies. Next thing, those stakeholder relationships. So how the company is managing the relationship. That's what I'm saying with, what should I say, suppliers, creditors, anything, debtors, customers, employees, shareholders, whatever it is, guys. All relationships will be valued because they will be of that perception that we are important to the company. Even employees are also very much important to the company. This gives a psychological feeling that yes, since the company is doing this much for us, obviously we can also do something. That is the psychology which the companies will, what should I say, the companies will follow. Last part though, corporate governance insights. It highlights different governance practices. That's what I'm saying. Diversity, fostering the trust, credibility with the stakeholders will be improved. Okay, so as I have said, this importance of ESG reporting, so you have to at least replicate 85%. 80 to 85% का content, so you have to at least replicate if similar kind of a question asks. Even they can ask from any aspect. They can ask from sustainability reporting. They can ask from business responsibility report. They can ask from XBRL. Like this, they can ask. There are high chances that we can't predict from where they will be going to ask the question. Okay, so this if you observe ESG criteria overview में environmental, social, and governance. From the starting itself, we have been checking this part. So आराम से you can check the part. Next comes human resource reporting. Human resource reporting is nothing but how the employees are hired, whatever the information, personal identifiable information of many of the employees. Like they will not go into that much personal details, but how much is the headcount of the employees? How much is the employee turnover? This is not normal turnover of the company. This is employee turnover. What is the diversity? Whether the entity is only focusing on a particular area or particular caste of people, or whether it is open for diversity. Employee satisfaction, engagement, and average tenure. Nowadays, companies have to submit even this human resource report also. Recruitment reports. For example, how the performance evaluation of the employees are being done. What is their offer declination rates? Why many employees are rejecting the company, or why the company have rejecting number of employees, number of candidates, how many interviews are conducted, how many people are being employed, what is the sourcing of the company and all. Everything have to be reported, guys. How the skill set will be evaluated, how bonuses, everything will be categorized, and how the feedbacks are being, or should I say, viewed by the company or viewed by the top management. And compensation reports, as in appraisals, paid time off, overtime, shift compensation, everything have to be reported by the HR. Termination budgets, equal important, employment opportunity reports, workplace safety reports, whether the place is safe for women or especially any kind of an employee. Employee grievances, how they are addressing, compensations and safety related data, everything is the key. Human resource reporting is also a very important report, because management will understand where the loopholes are. If every year by 30% are the labor who are, I mean, 30% ka employee turnover is there with the company, then you have to understand something is wrong with the company. Then you have to understand something is wrong with the company. Okay. So it should be taken care of by the top level management to not repeat this kind of a negative impact in the future. Okay. So human resource reporting, they can ask even this also, guys. So you only just have to frame a keyword kind of a thing, like how we are doing for other persons. And then aram se you can remember this human resource reporting ka part. Okay, fine. So next comes a value added statement ka thing. This value added statement popularly called as VAS, and we have market value added and last economic value added. These three aspects so are practical aspects. So these will be covered later after completion of the theoretical portion. Okay, fine. So value added statement will be understood later. So this format we have to remember, guys. I will explain this format, don't worry. We will come to that a little bit later. But before that, we have to check something which is called as, yes, this thing is there. I will come to this. Important, very important quarterly earnings call. We will come back to here. But before that, the last concept of this chapter, which is nothing but XBRL. They can even ask a question from this area also. Okay, so without any risk, we have to be very much prepared. XBRL is nothing but Extensible Business Reporting Language. It is a standardized communication language for expressing, reporting, and filing financial information by the companies. Let us try to understand. It is nothing but it is prescribed in the Companies Act. It is a kind of an accounting format. It is a kind of accounting presentation के लिए reporting requirement को satisfy. In order to satisfy reporting requirements, this is a kind of a accounting language. This is a kind of a reporting language. Okay, so you have to remember two things. Some important XBRL concepts are XML, and next thing to taxonomy. XML is nothing but extensible markup language. It what it will be doing is, so it will be converting whatever the human readable information will be there with some software kind of a thing. It will make that as a machine readable. For example, OMRs and all will be there, correct? OMR is nothing but machine readable format. So using some technology, whatever the human readable data which is there, that will be converted into a machine readable. XBRL is definitely XML based only. Therefore, it will be made compatible with other suitable software applications also. Just go through this. Taxonomy is nothing but it is a kind of a dictionary. It is a kind of a dictionary in XBRL which will be giving few tags for few items. For example, profit, it have some tag. For sales, it have some tag. For capital, it have some tag. For debt, it have some tag, and it will relate also. For example, interest is there. Interest have some relation with the debt. Correct. Purchases are there. Opening stock is there. Inventory is there. Inventory is having some relation with the purchases. Like this, it will be attaining. It will be attaching with the help of a tags. Understood? Yes. So next thing, though, this myths is there. You can just go through. Sir, see, this XBRL is not a separate accounting standard. It is just a reporting language. It is not a substitute for accounts. It is not a gap ka translator. Okay, whatever you have presented, that only it will convert. That only it will convert into a machine readable format, and I mean, you can transfer the data to any person. Of course, keeping in the mind confidentiality, you have to do that. It is not a transaction protocol also. It is transaction level captured. It is not completely focused on business information, but still it is more focused on addressing the generation and use of the information. So whatever the information which is used, if it is correct, the I mean whatever the sources which are used in the information is correct, then obviously the information also should be correct. Understood? Yes, so this thing is important. Features of XBRL very important. A category I can say. Benefits of XBRL reporting also you have to check. And what not, guys, even this users also very important users also. So 46, 47, 47, 46, 47, 48 the concepts so very important. Clear definitions have to be given. Taxonomies are there. Now these are reusable. So net profit means some tag they will give, that tag will remain constant. Which means whoever have it, uniform treatment will be followed. Testable business rules means it is completely logical, completely mathematical. Like it is like some kind of codification which is being involved. Which means even if you submit poor quality ka data, it will not allow you. Logic have to be followed. If that logic gets satisfied, then only things will be entered into the system. Multilingual support means it have multiple languages ka option. Easy translation will be done, and report also will be displayed in different languages without any effort. It is inbuilt in the software itself. It is inbuilt in the XBRL itself. Last month, was strong software support. Numerous vendors are there who are offering this XBRL. So if you don't want this, you can opt for Aram se another option is there. So these are the four features of XBRL reporting: clear support, clear definitions, business rules are there, multilingual support. Next thing though, benefits of XBRL reporting important. Automated data processing. If you feed the data, it only will be taken care of everything. No need to do anything. Next thing though, accuracy and efficiency will be increased. Accuracy and efficiency will be increased. Comprehensive definitions. If the definition is that much comprehensively defined, then data tags also will be placed accurately. You just have to find out what is the correct data tag and you have to do the accounting with the help of that only. Data review also will be done. Even the software itself will directly go through the analyze. It will only analyze the data. So any issues will be flagged by the system itself. Next thing, to improve the reporting quality as in data integrity will be maintained. Uniformity is the key. That's what I'm saying. Whoever have performed the XBRL, they will understand this. Interchangeability means different systems and organizations space seamless exchange will be done, enhancing collaboration. So cost and the time savings as in PDF XBRL. See, if you observe earlier, financial statements will be exported in PDF formats and all. Costs, time will be more. So in order to store the audited financial records and all, XBRL will reduce the cost and time which is associated to that. Transaction tagging is nothing but it tag individual transactions, enabling robust data aggregation and analysis while ensuring the accuracy and usability of the information. So users are whom? Number of users. Company also will be used. NPOs also. Accountants also will be using. Analysts, investors, regulatory authorities, government agencies, tax authorities, statistical and monetary policy authorities, and specialist data providers. Guys, who not? Companies for the purpose of reporting will be using this. Not for profit also, for their reporting needs they will be using. Accountants, in order to support the clients in meeting the reporting requirements. See, who will prepare? Accountants only will be preparing. Auditors, analysts, because they want to understand in which companies they want to invest. And things like this will be done only if they have a proper knowledge of the XPRL, which means they can also use investors also. That's what I'm saying. Whether you are seeing a particular entity or a stock as a potential investment avenue, you will be doing so with the help of this kind of a performance metrics. Government agencies also will be doing this. Even tax authorities also should be using XBRL to interpret the things. Statistical and monetary policy authorities and last may specialist data providers also will be using this in order to do valuable comparisons and all. XBRL International. This Aram you can just check, not that much important. You can ignore this. XBRL in India. Government have adopted XBRL for annual report and cost audit filings. The Reserve Bank and SEBI also have adopted for the banking sector and mutual funds. Now, MCA also have given the green flag. RBI and SEBI also have given the green flag. XBRL India may electronic business reporting, collaborating with regulators and industry stakeholders. So now what they are saying is XBRL should be adopted by companies to file financial statements. If you are a listed company, then yes. Other companies to paid up capital with a 5 crore or more, then also you have to check this. Turnover to 100 crore or more, then also you have to go for this XBRL part. Understood? Certain companies though they have given exemption. And regulatory bodies like RBI also will be checking. This is not for all banks. That's what I'm saying. Some banks are exempted also. But other if they are not exempted, they have to maintain. SEBI also will be initiating this platform for listed companies and mutual funds. Bombay Stock Exchange also the first Indian stock exchange to implement the XBRL reporting to mandatory for corporate governance and shareholding reports. This may ask an MCQ, so please refer this part. SEBI also initiated the SEBI Unified Platform for Electronic Reporting, which is Super D for listed companies and mutual funds. So finally, we have completed the theoretical part, guys. You have to go through most of the aspects. Maximum cases I have tried to give in keywords through which you can arams remember the content for a long time. But there are other things also. Okay, this is also there, which is nothing but quarterly earnings call. We can also check this part also because this is also quite important. Okay, we will go through this. So this is nothing but if you observe the word which is quarterly earnings call, it is kind of a call. It is kind of a conference call wherein a company management will be discusses its financial results either for a specific quarter or year. After this, usually a press release also will be conducted. So here, obviously the participants will be like investors, analysts, journalists with recordings and transcripts also will be available on the company ka website. It is just like a webinar. One second. Huh. It is just like a webinar or Zoom call kind of a thing. Of course, with backed up with security and all. It should not be shared with as many people. I mean, as and when the shareholders are intended, it cannot be shared by them. Of course, the company only will share those things. Okay. So the company's website where they will be disclosed. The thing is, it is very much important because for investors and analysts, though, they have to be well updated with what is the company intentions and all. So, whatever the insights which the company is drawing, which will inform the fundamental analysis and influence the trading decisions, they serve as a critical tool for corporate reporting, helping to update the earnings ka estimates and guide the investor ka actions. Whether the company is going for expansion or not, whether the company wants to sell any of its assets or not. If the investor ka opinion is I want to invest in long run, and if the company have decided to sell few of an assets, if the company wants not to go for expansion, then obviously there is mismatch in the stakeholder ka objective, I mean shareholder ka objective and company ka strategy. Correct. So investors will be placed in that a situation so that they will be understanding what are the company ka next plans. These kind of a things are very much essential, especially in this earnings call. So frequency and timings though, there is not that much stringent rule which is there. Usually companies will be conducting this every quarter kind of a thing. Announcements also will be formal announcements also will be given in advance in order to ensure the presentation. So how this call is basically structured is first of all they will be giving a disclaimer which is that whatever the data which they are showing in that call is subjected to estimations. This is the thing which they will be giving as a disclaimer even in the starting itself, and this is called as a safe harbor ka statement. Next thing though, financial results will be presented. Financial results as in CEO, CFO and will present and discuss the financial results and the future goals. Last part, the Q&A session also will be conducted. Investors can directly ask any questions and management will be provided with providing answers with the data also. Management will be providing answers along with the data also. To conclude, we have completed finally the recent developments in financial reporting ka chapter. And other than this, we have left only with this market value added ka concept and this EVA, economic value added ka concept. Just a minute. So finally, we have completed this part. Now, the only thing which we are having is this value added statement. Okay, fine. So next, last concept, very important. It is nothing but value added statement. Compulsory question. There are high chances that either they can ask a question from the value added statement or MVA or EVA. You have to remember. So students who are having basic knowledge of SFM will directly know, sir, what is the meaning of this MVA and EVA. Okay, basic formulas you have already know is what I will assume, but no problem. I will discuss one formula also. That is not a big deal. Okay, so check this part. Value added is nothing but it is a crucial measure of an enterprise performance, reflecting the net wealth created during a specified period. It is nothing but how much value it is created, how much value have been created to all the stakeholders. It will be explained in the value added statement. By looking the format, you will understand. Okay, see, some entities though may fail to create profits, but they will never fail in creating value. This is an alternate performance measurement because on the face of P&L account, if you observe, the company may report profits. But if you go in depth, I mean, the company may not report profits, but if you go in depth and analyze, the company is generating so much value which cannot be expressed in normal profit terms. Therefore, what they have did is they have designed some alternative performance measure, and that is nothing but value addition. Value added statement may this is also a kind of financial statement. So it explains sir, how the value is generated through resources and how it is distributed also. Two parts will be there in this value added statement. Sir, first part though, how the value is created. Second part though, how the value is distributed. How much value is created that will be explained in first part. Obviously, the generated value should be distributed to different stakeholders. So different stakeholders means employees will be there, shareholders will be there, government will be there. So how much value which is created, obviously that should be distributed to all the stakeholders. Sir, how it is described will be nicely explained in the statement ka format. Okay, yes sir. Distribution also will be done to which person sir? Employees also, government also, capital providers. Capital provides is nothing but any person who have given debt to the company. The company will be paying interest to that person. Correct? That is nothing but value addition to the debt holders. So even that also will be taken care here. Overall, it is nothing but it is a kind of national income ka accounting. Not only just the profit, it mainly focuses on other aspects. Other aspects like enterprise ka impact on shareholders will be focused in this aspect. Okay? Yes, sir. Understood. So we'll directly come to the format of the value added statement. Always remember, you just have to write value added statement of any entity, for example, A Limited, for the year ended on this date. Very simple. First preference. First part one though, you have to write about added value created. This is also called as gross value added. You can even show like that also. Added value created is also called as gross value added. This though will be disclosed in part 1 of the value added statement. So what about part 2? Part 2 make it will be distributed to all the stakeholders. Added value created and the disposal of value added, which is nothing but distribution of value added should both tally. See, it is very basic the point. How much value is created by the entity, that much value should be distributed by all the stakeholders. Some will be distributed to employees, some of the portion will be distributed to government, and some of the portion will be distributed to capital providers, and some of the portion will be distributed to stakeholders, shareholders. This is nothing but a concept of value added statement. Part 1 में we will be understanding sir how much value is created, that will be finding out. Part 2 में how it is being distributed. Sir, how it is. First, keep one thing in your mind that value added statement will be done from profit and loss account perspective. Ignore balance sheet items. Because balance sheet items pay, see for example, if I have plant and machinery 1000 rupees, if I have made an investment of plant and machinery 1000 lakh rupees, it will not give me any value. I have to use that plant and machinery. So using that plant and machinery, if I have made any sales, then that is my value addition. Similarly, if I have purchased anything, that will not give me value addition. I have to use that to prepare any final goods or finished goods, whatever it is. And if I sell those items, then that will be my value addition. So if I just purchase an asset and if I just keep it like that, it will not give me profits. Correct? It is not a value addition. In other words, what they are trying to say is this value addition may first you have to keep in your mind that P&L account transactions, whatever the items which are hitting in P&L account, everything will be appearing in this value added statement also. Everything will be appearing in this value added statement also. First, it will be starting with sales plus other income. Also, you have to add sales plus other income will be added minus cost of bought in materials. It is nothing but purchases, changes in stock, cost of goods sold. It is kind of a cost of goods sold plus any direct materials, packing, consumables, stationery, fuel and oil, electricity, repairs, etc. If there are any, that will be deducted. And any bought in services as in any cost of service, guys. Audit, insurance, rent and traveling, advertisement, postage, telegram, subscriptions, other expenses. All expenses will be debited. But if such expense is related to any specific shareholder, any specific stakeholder, that will be shown as a distribution. If it is not related to any stakeholder as in if it is not related to employee, government, providers of capital, retained earnings, then it will be shown here. Cost of bought in service may you have to check whether that cost is related to employees or government or providers of capital or retained earnings. If it is not related to these four stakeholders, it should come in calculation of gross value added. It should be deducted. Audit fees is not related to employees, not related to government, not related to providers of capital, and not related to retained earnings also. That's it. Concept is simple. Just take sales, add other incomes, minus cost of goods sold, purchases, stock in trade adjustments, changes in stock in trade, you have to adjust. Last may cost of expenses, cost of service expenses, cost of bought in services. If you do, you will be getting gross value added. And one more thing you have to understand. Sir, providers of capital, you have to understand. Important. Sir, if any long-term debt is provided, then interest on such long-term debt will be distributed here. Because that is nothing but value addition to the debenture holder or debt provider, whoever it is. But sir, sometimes in the question they will give you interest on overdraft or working capital loans. If it is an overdraft or working capital loan, always remember it is not distribution. It will be included in this gross value added ka adjustment only. It will be deducted basically because this is an expense. But you have to understand the difference. So if it is a long-term debt, then interest will be shown as a distribution. But if it is an overdraft or working capital loan, if it is an overdraft or working capital ka loan, it will be shown. It will be shown as it will be shown as it will be shown while calculating gross value added ka statement. To conclude once again, sir, take sales, say take other income, expenses may you just have to do purchases, stock in trade, changes in inventory. Those items you have to make. Next thing, the cost of what in service. Sir, what cost will be included? Which cost which is not categorized as employee के लिए contribution, debenture holder, I mean debt providers के लिए contribution, government के लिए contribution, last में equity shareholders or stakeholders. Shareholders के लिए whatever contribution it is there. All these four items will be shown as a distribution, sir. But what about others? Others will be shown here. Okay, but interest on working capital loans or cash credit or overdraft also will be adjusted in calculating gross value added only. But if it is related to long-term debt, it will be shown in distribution of value added statement in here. Quickly come to the question. Quickly come to the question, guys. Here they are asking you to prepare a value added statement. Okay, let us read the question. Let us read from last. So see, this interest on borrowings is there. Income tax, wages and salaries, employee state insurance, PF contribution. Guys, if you observe now, all these three are nothing but distribution to employees. All these three are nothing but a distribution to employees, which means, sir, my value addition statement, my distribution side, I have to add all these three items. Check. Distribution side, I have to add all these items. Understood? Yes. So next part. Sir, government के लिए taxes also they have given 552. So this also I will be adding. Sir, interest on borrowings also 82. Interest for capital providers. So this 80 for capital providers, this 552 for government duties and taxes. Check the part. Income tax 552. Interest on borrowings 80. Check the question. Check the question. Where is it? 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 Ha. Let us come to the question. Sir, first May. Turnover is nothing but sales ka figure. Sir, sales will be appearing in gross value added ka calculation. Yes, sir. This plant and machinery ka net. Okay, so this plant and machinery is a balance sheet ka item, so it will not be coming in value added statement. This will not be coming in value added ka statement. Sir, this loss on sale of machinery will be adjusted. Depreciation also. This point I have forgot to explain. See, retained earnings ka calculation mein whatever depreciation and retained profit is nothing but it is a kind of what should I say, value addition to the shareholder. Try to understand, sir, why this depreciation will be done. Arey Baba, this depreciation is nothing but, sir, every year pay I will be setting aside some amount that after completion of the tenure of the old asset, I will be having some amount to purchase the new asset. Which means if you observe the thing, it is nothing but already the value addition which is created, but I am setting aside in order to meet some future requirement. That's it. It is my profit only, it is my earning only, but I am setting aside for some purpose. So this depreciation, and not only that, any reserves also they have given. That reserves ka amount also should be shown as a distribution because that is ultimately shareholder ka fund. That is ultimately shareholder ka fund. Therefore, this will be also added in retained earnings ka calculation. This will be added in retained earnings ka calculation. Distribution में आएगा. Dividends to ordinary shareholders. Retained earnings में आएगा. Dividend to ordinary shareholders B will be added in retained. Okay, sorry, one thing. This is shown as dividend. If it is distributed, it will be shown as providers for capital. But any retained earning, na, whatever the balance, for example, the company ka profit is 1000. If 600 they have paid dividend, this will be shown as provided to capital. Sir, what about 400? 400 will be shown in the retained earnings. See here. To providers of capital means even interest and dividend both are covered, guys. This dividend will be preference share capital, equity share capital, everything. Ideally, this is also shareholder ka fund only, na. But since it is already paid, it should be shown separately. Balance which are written with the company will be shown here. I hope you have understood the difference. Yes, sir, we have understood the difference. Next, debtors will not come, creditors will not come. So check this part. Total stock of all materials, working capital and finished goods. Sir, opening stock is 320, closing stock is 400. Arey Baba, net to closing stock is more. So which means nothing but, sir, changes in stock to 80, debit will be there, 80 ka positive figure. See, you can show like this also, sir. Opening minus closing. If I do, I will get 80 negative. This 80 can be deducted from expense, or this 80 can be added to the sales. Anything is fine. Closing minus opening also you can do, and you can add that to sales ka figure, or you can do opening minus closing, or you can deduct that from expense. Basic math. Basic math. ठीक है sir. Raw materials purchased will be calculated in gross value added. Cash at bank ignore. Printing and stationery also will be calculated in gross value added. Auditors remuneration also, guys, everything is covered. This retained earnings, the opening balance is not matter. how much value addition is made in the current year, that only we are focused, which means 576 will be added. Rent rates and taxes, gross value added. Other expenses, gross value added. Ordinary share capital also we have to ignore, guys, to cut short. You can understand the question, guys. Very, very simple sir question. So, sir, first na, what we'll be doing is, again I'm repeating, take the total sales ka value. From that sales ka value, you have to add other income. Take the total of both. Next, the cost of bought in materials, for example, purchases, cost of goods sold, stock in trade, opening stock minus closing stock, or closing stock minus opening stock, you can add to. See, closing stock minus opening stock, if you do, you have to add to sales. Opening minus closing, if you do, you have to deduct from cost. Basic point, guys. Basic math going on. Yes, sir. Next, cost of bought in services means if it is not attributable to the four stakeholders below, then it will be treated as cost of bought in services. Example, audit fee, insurance, rent, etc. Blah blah blah. Next thing, so interest on OD working capital will be shown while calculating gross value added. Next thing, so distribution of value added may some amounts will be paid towards employees, some amounts will be paid towards government, and some amounts will be paid towards retained earnings, and some amount will be paid towards capital providers. Capital providers may, if you have paid any interest or dividend, that should be adjusted there. Balance depreciation also you have to remember. Any depreciation and retained profit also should be adjusted here. And to government, you will be paying taxes now. But remember, the taxes though don't include deferred tax. Don't include a deferred tax. Understood? Yes, sir. If I include deferred tax, my P&L, if I include deferred tax, my P&L will get affected. So if you don't include deferred tax right now, you have to remove the effect in the P&L also. For example, sir, see, P&L account में they have given deferred tax expense. They have given deferred tax expense. Sir, because of this expense, na, my P&L will be debited. P&L account debit to deferred tax expense. Now, what they are saying is don't take this deferred tax expense. Here, I have to take a net of default tax expense. Don't conclude the default tax. Don't conclude the default tax expense. Oh, but still what we'll be doing is if you understand there's a depreciation and the retained profit may, sir, if I don't take this deferred tax, my P&L account should be increased now because it is an expense. So here I have to take the deferred tax adjustment. It can be reverse also. It can be reverse also. I hope I have explained this clear. Just to solve this question very, very clearly, just aram se sit back and once again go through the question once again. Aram se you will understand. Okay? Fine, sir. Next part, sir. Economic value added and market value added. Basics nothing, so let us understand. Sir, economic value added पे only one formula is there. Remember that formula and go to the exam. Sir, EVA is nothing but no pat minus capital employed. No pat minus capital employed. Sir, what is the no pat? No pat already in valuation of goodwill ka chapter also we have understood what is the meaning of no pat. Sir, no pat is nothing but after tax earnings before interest. Earnings before interest and tax, and you have to take after tax ka effect. EBIT into 1 minus T is what you have to remember. Post tax EBIT. Post tax EBIT is nothing but NOPAT. From NOPAT, you have to deduct weighted average cost of capital into invested capital. Weighted average cost of capital into invested capital. Okay, we'll solve questions. I think in SFM you have definitely solved the questions, even in SPM BB also, if I am not wrong. I think these calculations, so you have did. Yes, sir. So last part, the market value added is nothing but market value of the capital, market value of the company minus total capital invested you have to do. Market value of the capital minus total capital invested you have to do. Sir, what is the meaning of market value of the company? Market value of the company is nothing but take the current share price multiplied by total number of shares plus you have to add the debt also. See, if I take the market price of the share, for example, if I got 100 rupees, I have 10 lakh shares. If I do, I will be getting the value of the equity. Plus, I have to add the market value of the debt. From that, I have to deduct how much capital is being invested in the company, which means total shares, total equity plus debt you have to take. Basics are points. Okay. So quickly come to another question, which is EVA calculation. Okay. Guys, I think you already know how to calculate the weighted average cost of capital. I think you have already know how to calculate the weighted average cost of capital. Just a minute. See, weighted average cost of capital equals to WD into KD plus WE into KE. Weight of the debt into cost of the debt plus weight of equity into cost of equity. Sir, how I will get this KD? KD though, you have to take interest into 1 minus tax. Sir, KE though, we have many formulas, but the formula which they will be focusing here is nothing but RF plus RM minus RF into beta. RF plus R minus RF into beta. RM minus RF is nothing but risk premium, and that risk premium should be multiplied with beta. Then you will be getting excess premium, and that excess premium should be added to the risk-free rate of return. Then you will get the cost of equity. Basics of formulas. So no PAT, how I will be getting no PAT is nothing but EBIT into 1 minus tax. EBIT into 1 minus tax. That's it. Everything they have given in the question only. Okay. So just observe this. Profit before interest and tax is 1000 lakh. This is nothing but EBIT. Take the after tax ka value, which is nothing but no PAT. So no PAT equals to 1000 lakh into 1 minus 35.875%. You have to do. See, 1 minus 35,875. If I do, I will get 64.125% into 1000. If I do, I will be getting 641.25 lakhs. It is correct. KD you have to take. Sir, KD though, see, where they have given interest at 20 lakhs, debt at 200, which means KD is 10%. But that is before tax. You have to make that as after tax, which means 10 into 1 minus 35.875%. If you do, you will get 6.4125. This is nothing but KD. Sir, K naught, so you have to do weighted average. See, 3000 is the total of these three items, out of which 200 is the debt. So 200 by 3200, if I do, it is like WD is nothing but 200 divided by 200 plus 2000 plus 1000. So 3200 I will get, which means 200 by 3200, 6.25% is nothing but my debt. Balance amount 3000 by 3200 is nothing but equity ka portion, and that should be multiplied by respective costs. Then you will be getting weighted average cost of capital, which is nothing but K naught. That's the basic formula. EVA equals to no PAT minus capital employed into KD. Okay, that's it. Basics of formula. EVA equals to no PAT minus capital employed. You have to do capital employed means weighted average cost of capital into capital employed. Take the total capital employed. How much capital employed total we have made, and that should be multiplied with the overall cost of capital. That's it, guys. That's it. Aram se you can check. This is 3200 into 16.34%, guys. Little bit mistake. Okay, so the next no things are fine. That's it. So finally, we have completed very important content from the examination perspective. Okay. Yes. So with this, we can wind up total theory section. Total theory session along with very important question, which is nothing but this EVA, MVA, and value added statement ka discussion also we have completed. Okay. Fine, sir.